Good morning, everyone. What is up? Emperador Maximiliano Andre. I've got you in the house with us this morning. Gonna ride with us. I'm excited for this. Andre, let me make sure you're unmuted there. Boom.
Can you hear me okay?
I can.
What's
I
up,
hear
man?
you perfectly. How are you this morning?
I'm doing great. How are you?
Fantastic.
I love your sombrero, by the way.
Thank you. Yeah, it was a hit. So, like, man, you get in the sun out in this area, like, I don't know. I like this type of hat. I like to relax by the beach when I can. But I put it on. We were having a good stream on Wednesday, so I threw it on. I said we're gonna throw it on, and it was fun. Got people rolling in the chat already. Good morning to everyone. KB, one of my guys over here, is he was killing some trades the other day. Good to see everyone. What we are going to do this morning, and so KB actually hit this, Andre. I have the exact same thought he does. Probably won't touch anything until that Michigan data. I wasn't planning on touching anything until that data either way. I mean, based on what we're doing, we're sitting right where we sat pretty much all night on NQ, ES, pretty similar. So I think it's a perfect time to have you walk us through the new Edgeful site. So I've shown it some on the stream. I've been using it. Maybe there's some things I'm missing that I might learn from you. So I'm excited for that, as well as let's show everyone kind of a walkthrough of it for the first part of the stream. And then I'm interested to see your process, Andre, how you go through and find your reports, the guy that built it. And then, of course, I'll share some of my thoughts, how I'm finding my trades and reports as well. So if you want to throw screen share to me right there, let's get it up.
Can you see that? Or can you see that? Can everyone see this? I'm assuming yes. Is it big enough, by the way?
It looks pretty good to me. Chat, if you guys can see that, let us know if it's a little too small. We can blow it up. So hit us up in the chat. Make sure everything looks good. But chat always helps me out, Andre. I'm like, hey, do I look good? Do I sound not me like my looks, but like, does my screen look okay? Do I sound good? So if you're in the chat, let us know everything's clear this morning. And let's roll into it. 5 minutes until the open here. I'll give some live updates. You know, if the market does anything wild, news comes out, of course, I'll keep everyone posted on what's going on. And in the meantime, Andre, I'm ready for you to walk us through. So what's this? This is our landing page right here. What are we looking at?
This is so we actually are designing a homepage, and I would love to hear what you'd want on it, but we can talk about that kind of after we go into some of the the main sections. But we are going to have an actual homepage that when you come onto the site, you can have kind of like your preferences on there. But in terms of this update, I'm not sure how many of you are new, how many of you have seen the old update. I'm sure you've seen like videos or screenshots. This is a pretty different layout. So there's really 3 main pieces of Edgeful now, and that is the Discover page, that is the Report page, and that's the What's in Play. So we're going to start on the Discover page. And really the reason that we built this was because previously all of our reports was just in a drop down pretty much, where you just have to go in and pretty much like have to click each one to see what it is. And that was like a little bit of an overwhelming experience. So we wanted to give an entire section of the site to the exploration or discovery experience. And that's where this discover right over here on the top left, if you guys can see my mouse, right over here is where that section is. So this page is literally meant for you to explore the reports that we have, for you to go around, look around, poke around, see what's what. Now, going in terms of like what you can do here, you can pick the assets. So certain reports or certain assets have different reports for them. For example, stocks obviously has earnings reports. Obviously, futures doesn't have earnings reports. So if you're trading futures, it defaults to futures right over here. So you can just stick to that. Then right over here on the left sidebar is where you can start to filter what you're seeing and what reports come up. So think about if you want to buy something on Amazon, you will go to the filters on the left. You can click, you can filter for whatever you want. And then you know that after you've filtered for what you want, everything in this middle area is going to be what you filtered for. So in this case,
did you design it that way on purpose? Because my first thought was exactly, I was like, I feel like I'm on Amazon and I can like shrink my results like by brand or by, by price and stuff. That literally is what I thought of.
Yeah, that's exactly I mean, we know that the experience is familiar and like we want to like maintain that. And this is for sure built in an e-commerce like experience. Like that's why we did it this way. Filters on the left, the card, like even the cards, like the way that we have here, are in the middle. You filter down, you get more narrow. You remove the filters, you get more broad. That's for sure intentional. But let's say here you want to kind of discover you like to focus on volume a lot. You want to focus on volume. You can go and you can filter by report type. You can filter by report category, trading style, and some of the shortcuts that we have here. But let's say you want to look just at volume reports. You click over here, and now you've filtered the entire list to the volume reports that we have. If you want to look at indicators, if you want to do both volume and indicators, you can do that. If you want to uncheck volume, you can see our indicator reports here. So I'll use price action because we obviously have the most price action reports. I'll use that as the example for this. So now you're looking at price action. By the way, these are the most popular report types for sure, the price action reports. But let's say you just want to look at the session analysis. You just go and you uncheck these boxes, and now you're looking exclusively at the session analysis reports that we have. If you want to add in market open and close strategies, you can go and see that. Now, one thing to keep in mind is that these we might need to kind of make them bigger, to be honest. They do kind of blend in, but this is the title for all these. And then you can see session analysis starts right down here. There is a division, but it is a little bit small to see like what section you're looking at. But okay. Now, let's say you filtered for what you want to look at. You want to look at market open and close strategies, and you want to look at session analysis. From here, there's only really 3 buttons that you can click. There's only really 3 things that you can do. You can bookmark the report right up here on the top left. If you guys can see where my mouse is, this little blue button means it's bookmarked, and this gray one means it's not bookmarked. So now, if I bookmarked something, where does it go? You see this bookmark bar on the right? It goes right over here. So you can open and close this.
That's the first thing I did when I opened this up. I was like, okay, let me bookmark my gap fill and some of my other favorite reports. So I have that 100%. List and then my tickers too. Yeah.
Yeah. And this is actually going to make your experience so much better. Like we are literally taking some of the most valuable real estate on this page to tell you that bookmarking is going to make your experience a lot better right over here. So I really do recommend, like you might think it's really not important, but I really do recommend actually bookmarking your reports because it'll make your life so much easier later where you don't have to memorize or like go through. I think you're
I was trying to see if that would make it any bigger. We're good.
I can make it bigger too. Is that a little bit better?
Well, that's actually a little bit better. Yeah, just zoomed in a little bit. It's perfect.
Okay. Yeah. The reason, I mean, I just don't want everything to start smushing. I just got a new monitor, the Apple Studio display, and it's great,
ultra wide or whatever.
Yeah, it's good, but I always have this problem on streams. It's like I need to zoom in so much, but okay. So I highly recommend looking at, or bookmarking your favorite reports, because you can instantly jump from gap fill to previous day's range to outside days to whatever you want. And it's a lot easier than having to search through the dropdown, which I'll talk about in a second. But from here, so you can bookmark number one. And then the next button that you see here is the explainer button. This is super important when you're exploring the new reports. So if I click on this, what's going to happen here is that the image is going to become bigger. So the actual explainer image will become bigger. So you're seeing what a gap is here, obviously. And then you can see, and this applies to every single report, we have a one sentence explainer. So you can see for the gap fill, this report measures how often price today touches the previous session's closing price. Now from here, we also give you the opportunity to bookmark right down here, and then we give you the opportunity to go straight to the report. So I'm going to go to the report. That's all for the discovery page. This is where you can go in, kind of like look around, explore some reports, see if anything stands out to you. This is more for like pre-market or after hours or on the weekends. You go and you kind of look at what we offer. Anything new that comes out will obviously be on this page, and will be in the new reports section down here. But for now, I'm going to go to the gap fill report. So from here, did I miss anything, Amp? Do I have any, did I miss anything about the Discover page? Is there anything that, like, do you have any questions on anything?
No, I think that's pretty good, because like when I remember going through it like the first day, I was looking around Discover, getting set up. I think it was great to spend some time on that to get everything set up. And Andre, I think you probably agree with this, but that's once you kind of go through that Discover and figure things out and get set up the first time. I don't know about you. I don't ever look at it anymore. I built it out in my, and customize it to my style and my trading stuff. And so I come in and I go straight into those bookmarks or straight into the what's in play and get my watch list stuff. So just to mention that for everyone, Discover's perfect. Getting to know the site, getting things set up and tinkered and customized to kind of your liking, and then boom, you're ready to go. Those things save in there too. So it's not like you have to do this every time, right?
Yeah, for sure. And if, let's say you've been with Edgeful for like 2 or 3 months and you want to go and see something new that we've released, you can go to that Discover and then just go down to this new reports right down here. And one thing to keep in mind is that, for example, the initial balance breakout is an old report that we have, but there's a bunch of new sub-reports in there. So if you guys ever want to know some of the new stuff that we've released, just filter for the new reports. It'll automatically clear all your other filters here, and then you'll be able to see. So if you want to ever poke around to anything new, you can do that from there. But let's talk about the new report page. So in this case, you can always have your bookmarks open, which I'm totally fine with. I do recommend having it open, because from here, if you're looking at the gap fill and now you want to look quickly at the orb, instead of like going to try to find it in a dropdown, you can just go and click here right on the orb. And now I've switched. So from here, for anyone who has been with Edgeful for a while, you'll see that the dropdown, this navigation bar, is exactly the same pretty much as the old one. But for anyone who's new, I'm going to explain like as if you've never seen this before. So from here, we actually didn't want you to have to go back and forth to change reports or to change anything. We wanted you to be able to experience the majority of Edgeful on this page by itself. So from here, you can change your asset that you're looking at. So if you want to go from equities to futures, you can do that from here. So when I have the futures asset selected right here, I click on this ticker, the drop down. Now I have all of the futures tickers that we can look at here. Then the choose report type. So Edgeful has 3 different types of reports: price action, volume, and indicator reports. We actually just added this all, which combines all of them together. And then what's actually really convenient is this choose report. If there's something new, let's say you're watching Emp's stream and he brings up a report that you haven't seen before, so it's not in your bookmarks, you can open this up and then you can type, actually it automatically like opens the search right up here at the top, and you can just type in RSI. And then the RSI performance report will be right there. You can type in fair value gap. The fair value gap report will be right there. So this is one way, or you can type in like previous day's range. It'll be right there. So if you don't have it bookmarked, you can still explore all of the reports from this page. You don't have to go back and forth from the Discover to the report page itself.
I'm going to change the layout like this so we're not over the bottom, because a lot of that information is down there at the bottom on the right side. I love this layout though. And so first off, I don't know if I was looking at mine as you were going through this, because I was like lining up some stuff here. Just I'm one of those, like, I play along, like that way I can learn, but I'm a doer more than just like a watcher. So if you are playing along on your system, it's just fantastic. I love looking into it. But that's what I'm doing. And the first thing I love is the fact that you've added that what's in play, just snippet at the top of every report. Like that was a huge addition. And I love seeing that. And the chat, I think, has seen that in my streams as well. Like, I was like, okay, let me go into the report. Okay, I've still got that up here that we were referencing from what's in play, where we basically hang out at. But then I've got all the data right below it.
Exactly.
The live data. And whose idea was that? That was fantastic.
that was my idea.
There you go.
Yeah, that was my idea. The reason for that was because what I noticed was that people. Previously, we had the what's in play completely separate on a completely different page. And what I actually found that I was doing was having to switch back and forth to go and like change the inputs on the report and then go to the what's in play page and then like see what's going on right now and going back and forth. So I thought that it would be a lot better in terms of the experience to have it on both, where if I'm looking at the gap fill right now, then I can go to the report. I can do all of the customizations. I have all the flexibility that I want, but I can still see what's going on right now. I don't have to have this like FOMO on the what's in play that's like on another page, or I don't want to open two tabs of Edgeful and have them side by side. So now I have it right here. So that was actually something that I'm really happy about. And we actually did a survey on the site, which was required, which people were not thrilled about, to be honest. So in order to close it, you did have to answer it. But we asked also, do you want the what's in play to be on its own page or on the report page? And I think like 75% of people were like, include it on the report as well, which is like over like a ridiculous amount. Yeah, so that was like what gave us the confirmation, like, okay, let's run it for sure. Just finishing up on this sidebar quickly. You can select your date range right here. This is how far back you want the report to look. Your session, obviously, is the session you're looking at. Something that's really important for you guys to understand is that when you pick the New York session, the 9:30 to 4 p.m., you are literally deleting the data outside of it. So you're filtering only for the regular trading hours, only for 9:30 to 4. So your open of the day is at 9:30. Your close of the day is at 4. It is not the 6 p.m. open to the 4:50 or the 5 p.m. close. Just so you know, if you want to look at everything, you have to go to the daily session. This includes everything. Just really, really important when you're looking at futures to keep that in mind. Now, the last two, this one right here, number 7, is really important. This is the sub-report dropdown. So if we're looking at the gap fill report right here, you can filter this. This is typically just going to be like additional filters. You can actually filter this report by gap size, by weekday, by fill time, by close. You can pretty much do like whatever you want based on these filters. So anytime you come across a report that you like, just check this out, this sub-report button. Just look at it, because it could have something that has very meaningful data in there, or something that might stand out to you even more. Like the initial balance, I think, has like 7 or 8 sub-reports now that are completely different concepts around the initial balance. So they like could be separate reports if we really wanted them.
It's like right here on gap fill, like the stream, they know I'm a gap fill by size is my favorite one. So
for sure,
that's what I'm going right there on the left side. I'm hitting that by size every single time, and I'm checking out the size.
Yeah. And in this case, like what you can do here is you can filter based on the gap size. So right now, you can see today on ES, the what's in play will actually tell you the gap size. So you don't even have to calculate it anymore. So you can see it's 0.06%. Now, in the last 6 months on ES, when there's a gap up here. So in the last 6 months on ES, 76% of gaps between 0 and 0.19% have filled. So there's a very high likelihood that today is going to fill. Obviously, I'm not looking at the chart right now, so I'm not really sure what's going on. But there's a very high likelihood that at some point today, this gap is going to fill. So really important to keep that in mind. the size is a huge driver on whether this gap is, or whether any gap is going to fill or not. So really, really important to keep that in mind. And the what's in play will pretty much tell you exactly what you need to know in terms of like filtering for the right information. Now, the last thing that I'm gonna say here is about the sidebar is that this customization button is very important. Whatever customizations you have selected are going to appear down here. So you can see I have my fill percentage at 100%. We actually just added a new update to where you can go to more than 100%. So if there's a $10 gap and it fills and you want to check how often it fills 200% of the gap, you can actually do that now. You can check for greater than the gap fill. Yeah.
That was a trader came up with that for sure. That had to have been a trader suggestion.
Yeah, that was myself, the trader.
You had that too?
Yeah.
Well, I know you're a trader. Yeah. That was like that. Yeah. That's interesting. That's because that's you're thinking about the size
continuation,
plus, plus one continuation.
Yeah. And this is something that I've actually, So, and then you can actually see, so we give you the option to hide it, to hide the customization, which to be honest, I'm not sure if we should keep that or not, because it is extremely important that you know what your customizations are. So like, let's say I have this at 40% gap fill. So like less than a half gap. Now my stats say 80% of the time, price is going to reach 40% of the gap. But if you have this closed, you don't really know what your customization is. And that's important because you need to remember. So like, even if you want it, like we don't want you to forget or whatever customizations you have. It happens to me sometimes with the orb stats, like where I have a 5-minute orb selected and I forget that it's not the 15. And I'm like, wait a minute, this doesn't look right. And the reason I know it doesn't look right is because I stare at this all day, but like a new user is not going to know. So I do recommend always having this open for sure. But yeah, any questions about the sidebar? Did I skip anything here? It is like really your steering wheel for the site mostly before I kind of continue into the actual report page.
Yeah, guys, if you have any questions in the chat, make sure just type them in there. We'll try to hit all of them and make sure. I mean, we've got Andre here to lean on this morning, so we will we'll definitely hit Andre with any questions. Throw it in the chat. We'll take care of that. I think that's good for at least from my perspective from the sidebar. Yeah. I mean, maybe I'm a little bit more familiar with it, so I'm glad we hit all of that. And it's. You said that that's the steering wheel, right? So like, for sure. I sit down in the car, I sit down on what's in play. And then when I'm looking at where I'm going to go, where's my GPS? Okay, here's my gap fill report, whatever.
Exactly.
But to actually steer and get that's it right there. It's that left side.
Yeah, for sure. Now, I want to talk about something that you had mentioned earlier, and that's the watch list. This section over here off to the right, if you can see where my mouse is over here off to the right, right now, this is a huge improvement in terms of the user experience, because in this moment, if you wanted to go and look at the gap fill stats on a NVIDIA, for example, you would have to go and click on futures. You have to click on your asset. You have to click on stocks. You have to click on the ticker. You have to type out NVIDIA. You'd have to click on NVIDIA, and then it would switch. It's a lot of clicks. It's a lot of typing. It's a lot. So I'm going to go back to ES for a second. And now what you can do is just build a watch list of tickers that you know you're going to look at. So if I want to switch from futures to Tesla specifically in one click, I can just go to my watch list and I click on Tesla. And now all of the steps that I just did have been bypassed. It switched from futures to stocks, and it switched automatically to the ticker I want, which is obviously Tesla.
Made it faster. It's faster.
Yeah.
It's faster. If I'm trading and I need to get information quick, you guys have 5x the amount of speed that it takes, or the speed and what I can get to seeing the information data I need to make quick decisions.
Exactly. And it's also super easy to add to your watch list too. So there's 2 ways to do it. You can click on this watch list button up top, or you can click on the plus right next to the watch list button. So from here, you click on watch list. Let's say for example, here, I don't have NVIDIA in my watch list. Here, I would just go and I'd type in NVIDIA, click on it, and then you can see it appears right here. Now I can go back to my report page, and now NVIDIA is right here at the bottom. I can automatically switch from NQ to NVIDIA in one click. So I do seriously recommend using this sidebar, it will make your experience infinitely better. Like without question, it will make your experience better. So I do highly, highly recommend using that. Now, I can quickly run through the rest of the report page. We actually just released a pretty cool upgrade that's I really like, and I'll get to it in just a second. But every report has the visual graph and the table graph. So you can see this 70% filled. You can actually see all of the days or all of the instances, like the actual frequency of what makes up that 70% right over here, which is obviously super important for you to know. Like if your sample size is like 4, that's a very big difference than if your sample size is like 60.
That's a great point, because there's sometimes you can look at a stat and you're like, wow, that's a powerful stat. But if it's only, if you're using 6 months worth of data and it's only been 10 times versus 100 times or 80 times, like that's a much different strength of the stat because the sample size.
Correct.
Like that's actually a very good point. And something that I pay attention to as I use Edgeful is if I have, so like the IB happens every single day, right?
Correct.
So if I'm just looking at the main IB and I see 125 days and something has happened 110 of those, like that's a super strong stat to me. But if it's okay, it says 90%, but it was 9 out of 10 over 6 months, only 10 occurrences. That is a much different statistic, in my opinion.
For sure.
So, great point there. I'm glad you brought that up this morning. I hadn't thought to bring that up to the stream before.
Yeah. And this is on every single report, by the way. We always have the frequency on the report. So, like the actual number of how often it happens, it's obviously super important. So, always keep that in mind. We have the visuals because it's easier on the eyes, it's easier to understand, it's easier to visualize, but the frequency is very important. Now, one thing that we added, which I'm really excited about, is the streaks. Now, you can see here, the streaks, it's like, honestly, we've always had it in this table form, but it's just so much easier on the eyes now. You can see on ES, the last 5 gaps up have all filled. It doesn't mean today's going to fill, but the last 5 gaps up on ES and each of the dates are here have filled.
I like how it's got the date on there too. A lot of times I remember certain dates for whatever reason, like, we had this data point, or we had, FOMC on it was the 29th or something. We had FOMC. It's like, I remember some of those key dates, but just seeing what's happening. So like we noticed that, was it back in December, Andre? We noticed that like the gaps went on this like weird run of not filling until like
it was
a
crazy.
day or two later. It was a weird deal.
That was actually super annoying.
As a trader, it was frustrating.
That was really annoying because I personally, the gap fill is like my favorite setup, but I was not enjoying that, to be honest. But the streaks here, and something to keep in mind, the reason we have the dates is because there's not a gap up every day. There's also not a gap up every other day. There could be like 4 gap downs in a row. That's why it's important to keep in mind the dates here too. So like now we're looking pretty far back actually to the last, to like the 5th oldest gap up is probably like a couple weeks ago now. So the streaks are really cool, in my opinion. Obviously, everyone has been loving them just to see like kind of what's going on. Then this table makes up every single day of the results. So you can see right here, this 70%, all of this frequency here is pretty much like broken down every single day in this table. So you can sort by gap size, and then you can filter. If you go right here, you can type in gap up. We need to change the transparency on this pop-up. It's like completely transparent, which it shouldn't be. But now I'm only looking at the gaps up, and you can filter, you can sort like any other table. You can play around with it. Yes, thank you, KB.
KB knows.
KB knows.
And like, so multiple levels to that comment too. First is this stuff used to take forever, and it was like research stuff. Like I'm doing this at night or like 2 hours before the open and stuff, and I have access to it. Not only did I have access to it in real time at first, then I had access to it from Edgeful. Then I had live data behind it, which was even faster. And then now it's you've gone from like a Ford F-150, like single cab, like 1989. You've brought us up. Now we're in a Tesla now. I feel like you hit that go pedal and it just takes off.
I thought you were gonna say a Raptor, like the
Yeah, I like
The
those Raptors too.
uh,
Those Raptors will get up and go. But I was just saying the
yeah,
response time of Tesla
yeah,
is crazy. Like
yeah. Of
it
course,
blows
of
my
course.
mind. But
Yeah,
that's what I'm saying. Just the speed itself of how
yeah,
fast you can get to the data and flip from one to the other. The feature you hit a while ago, I think, is huge. Whenever if I'm trading, QQQ and NQ, either one, I'm looking at both, and I don't have to go from stocks to futures now. And
yeah,
okay, let me rebuild the report and reset and get to where I was going. It,
yeah,
it's it's just staying in there, and I can go back and forth on the watch list. And then
yeah,
for people that trade options, you may be in a great options trade, but if SPX or I'm not SPX, but SPY or QQQ fills the gap,
yeah.
and the market turns back around for a half an hour, I don't want to just keep sitting in those contracts and
100%.
and take that risk. So it's always good to know what's going on in the general market, even
Yeah,
if you're trading an individual name.
yeah. Without question. And once we get to the what's in play, which will literally be in 2 seconds, I'm going to touch on something that we're going to release soon. Probably by the end of probably by the end of next week, hopefully, which is another like massive upgrade towards the live data piece itself. But the last thing that I'll say here about the report page
All right, get excited.
is the explainer videos. Now, I highly, highly, highly recommend that you guys go to these videos when you come across a new report. They're very short. They're at most 5 minutes, sometimes like 6 minutes. They tell you exactly what the report is measuring, how you can use it with live chart examples. Make sure that you don't make any assumptions on what these reports measure. You want to watch these videos. It's the best way to understand exactly what's going on. Typically, any questions that you have about the report are going to be answered in here. If you have any additional questions, obviously you can reach out to our support down at the bottom right. Then we have the explainer charts, all these little charts down here. And then off to the right, we have some explainer text giving you examples of like, what does this measure and how can I use it? So that is the report page. And now we can jump to the what's in play right here. So this is I guess your favorite section so far? Emp?
I'm sorry.
This is your favorite page? This is your favorite page so far?
Oh yeah, by far.
The what's in
All
play?
right,
Yeah.
my new squawker was going off for a second there, and I was hearing you and him at the same time, and so I got a little bit
No worries.
lost. Yeah, no. So this is my landing page.
Yeah.
I edgeful.com. I'm hitting enter. It's on my bookmarks tab. So
Yeah.
edgeful.com, and then I just immediately go straight here, and this
Yeah.
is where I land, and this is where I'm just automatically absorbing a lot of data all at once that's updating in real time. And
Yeah.
so this is my landing page. And then beyond that, I go into the individual reports, but this is where I just hang out.
Yeah.
This is my airport lounge right here.
Yep, for sure. And like you said, if you guys do want to default to this page, you can always just bookmark it using this link, because the links are all the links are customizable. Like if you bookmark the what's in play link and you obviously click on that, it's just going to take you here instead of the report page. So if you prefer to open here, you can obviously do that by just bookmarking this specific link.
I feel dumb now. Why didn't I do that?
Yeah, I mean,
you just saved me a click. What am I doing?
Yeah, you can bookmark this link specifically.
Hey, the way NQ moves, sometimes that click is worth a couple $100.
Yeah, unfortunately or fortunately. But so what's the purpose of this page? What is this built for? What do we do with it? What can you do with it? Edgeful has over 100 reports. What the what's in play is actually built for is to tell you when each of the reports are setting up, what the relevant targets are, what the probabilities are, what your bias should be, and when they're in play and when they're no longer in play. So, for example, you can see right here, there's the gap fill report. Now we're looking at ES. You can see that the gap has not filled. Right over here, you can see the gap status is not filled. If I switch over to NQ and I'm using my sidebar, you can still use your watch list on the what's in play, or you can obviously use your ticker selector over there. But if I switch over to ES, did I click it? If I switch over to ES, if I switch over to NQ, You can see that this gap did fill. So there was a gap up, 0.07%, gap filled. Now, all the information that was on the ES page is gone because the gap has filled. We don't want you to look at it anymore. It's a setup that already happened. Don't look at it. Focus on something
Yeah,
else. So that's why we take
don't need to
away
know.
the
We don't need to
information.
know the distance to the target now, like what the bias is. I don't want to see that red bias on my screen anymore.
Exactly.
I was looking at this. We had a post go out yesterday looking at this because there was some conflicting data on here, and we saw choppy price action, and that's
Yep.
something we could talk about here in a little bit when we finish kind of walking through here. But
Yep.
so the gap fill was part of the confusion yesterday, but once it filled, I didn't have the red kind of like it's almost psychological too, because I didn't have like the red bearish, not filled on here. It was done. It was off. You pulled out the extra data and just told me, hey, this is the size and it's done. And it's, it's no longer in play, quote unquote, in play. So I think that's a fantastic idea and feature there.
Yeah. And this page is only going to get better. But in this case, if you do it, like let's say you don't like the gap fill for whatever reason, you can go off to the side here and actually just hide it. So if you uncheck this box, you can just go and hide it. And now you can see it's obviously gone. For example, the IB and the opening candle continuation doesn't form until 10:30 Eastern time. So what you can do is you can go and you can hide them. And now you can look at all of the relevant reports. Obviously, we're going to be adding more and more reports to this every day. There are a few that we're going to add pretty soon, actually. But this is like the page where you can go and you can see what's setting up. You can see each of the reports. Eventually, we're going to be able, which you and I were actually talking about privately, is you're going to be able to customize each of the reports in here. So what I mean by that is, and specifically for you, I know that you actually look at the 30-minute orb, not the 15-minute orb. Right now, we have it so where it's the 15-minute orb and you can't change that. We're going to allow you to customize these reports or each of these in the what's in play specifically. So we have the 15-minute orb, we have the 60-minute initial balance. These are the industry standard. And for example, the opening candle continuation, we have it set to 60 minutes. But if you look at the 30 or the 45-minute, you'll be able to go in and change it based on what you actually want to look at. Same thing goes for like everything across the board in here. Like ADR, we have the ADR length at 5 days. But if you want to look at 14 days, you can go in and change that. So all that's coming. And the last thing that I'll really touch on here is that right now we have this view set to like a default where you can't move things around and you pretty much are stuck with the version and the order that we have. But let's say that you have a morning setup, like a market open setup that you want to look at. Let's say you have an afternoon setup that you want to look at. You're going to be able to actually filter or like save your views the same way that you do on Webull or on Thinkorswim or on whatever other like chart like brokers you trade on. Is you have your setups. You have your ticker over here. You have your whatever over here. You have like your layout. That's what's going to come to this too, where you can save your morning setup and you'll be able to just like open this drop down and like click all reports, morning setup or power hour setup or whatever else.
Oh, that's great.
And it'll just automatically change right there for you.
Yeah, that's great. So that was one thing. Like right now over there on the left side, if there's a few that I like outside days, previous days range that are a little bit lower. And I'm like, man, if I could bump those up, a little bit higher, so it's something closer that I'm looking at. But I just learned right now that I could hide some of them.
Yeah,
I just learned that right now.
This. Yeah, you can uncheck that. Actually,
I've learned two things from you that is going to help me out just in this last 5 minutes. I didn't know that I could click back on that bookmark thing on the right side and make it go away. I guess since I had it open, I just stays open, and I didn't realize. I don't know. I get into trading or whatever, and it does squish it down a little bit on my screen. But now I didn't know that, so I learned that, and then I also learned I could hide whatever I didn't want to see over there on the left side.
Correct.
But beyond that, as the next update comes out, where it is the more of the customization comes around, which there's already great customization here, but for it to go even further, where I can kind of, oh my gosh, market just took a big old dump.
What's going on here?
The Michigan sentiment data. All right, I'm taking a look here.
Yeah, you can pull up your. Do you want to pull up
No,
your
it's
screen?
it's good. It's good. I was just letting people know. I mean, I haven't taken any trades, and this is why I didn't want to take a trade. If you looked at this morning, it looked pretty bullish.
Yep.
This is tough. This is why I didn't want to trade before any data. That data was actually pretty rough. If you pull up NQ, if anyone's just looking around right now, you pull up NQ,
Yep.
you'll see we just dropped.
Here, I just pulled it up right now.
Yeah, zoom in on that. Look what we just did.
Here,
This
let me go to
a dirty drop.
I just went to a 1 minute there.
Yeah, look at that 1 minute candle. That 1 minute candle is like 100 points.
125.
125 point 1 minute candle. That was absolutely insane.
That's nuts. Wow. What a candle. So
that's why I wasn't trading the first
half. What data was that?
That's Michigan consumer sentiment.
Wow.
Friday mornings, and this is the preliminary one. So they have preliminary, then they have like a couple revisions and final. But this is for whatever reason, because you'll see like the Dallas Fed manufacturing, Philly Fed. No, this is the Michigan one. For whatever reason, this one moves the market. It's always on Fridays. The Michigan one's the one that, I guess, because it reads into the consumer a little bit more. But for whatever reason, the market really pays attention to this, and that's why. That's why I said, and when me and you were talking, Andre, I said, look, going through this walkthrough first on the stream this morning to avoid trading, we're still pulling down lower here. To avoid trading, I think is the smart thing to do, because I'm not looking to trade, and we know we have this data. And then I would love to see you walk through this, and then as we finish that, we can kind of go through our process. As traders, you and me both, we can kind of go through the process here. After that, plenty of time left, and let's continue walking through. I just wanted to give everybody a little market update. If you are in any type of positions, obviously you're probably getting alerts right and left, or order filled, or whatever it is. But that's wild. We are down over 200 points now from where we were just 10 minutes ago. But anyways, let's continue just keeping everybody
not much left. Yeah, not much left here, to be honest. Like in terms of so you can see right there, the NQ broke the orb low. You can see the breakdown is a yes. Now, obviously the IB and some of these other stats will probably, the IB, we don't know, but the opening candle continuation will probably form bearish, which will give you a bearish bias for the rest of the day. But in this case, you can see what like, for example, the ADR gives you the bullish and bearish potential moves based on what the ADR is today. The 15-minute consecutive bars, this is going to tell you what the current streak of red or green bars is. There's a bunch of other ones here that you can look at during the day and kind of get an idea of what's what. Now, I personally like to wait until the IB or like that first hour is formed, because these three are very strong. Like the initial balance and the opening candle continuation are very strong reports. But if you are trading that gap fill, you'll have all the information you need right over here. So let me actually just pull up the gap, the ES, because I'm pretty confident the gap just filled. Yeah. So in this case, you can see the gap did fill. Obviously, very small gap today. But what you want to look at is the smallest. It's a very small gap. You can trade it, obviously, but there is data in this case. So you just kind of have to be a little mindful about the data, like Emp was saying. But someone just wrote, why SPY dumping? Because of the Michigan consumer sentiment.
Yeah.
But yeah, this is like one of the ways where you can go in, you can kind of see what's happening now. You can see how you can take advantage of it. And you can actually go into some of these reports and see what the data shows for the specific ticker you're looking at. So yeah, am I missing something here? What are you thinking right now?
I think that's like everything, as far as maybe walking through. So you find something on what's in play that you're interested in, and you're pulling up the report, right?
Yeah.
So how are you? That's the basic next step, right? If you're using this, so if somebody has something on the what's in play, they see that piques their interest, or maybe it disagrees with something that they're trading. Yeah. You're just going to hit that go to report. And then like for me, I'm going in there, and if I have any customizations or any other things that I'm looking at,
Exactly.
then I'm
Yeah,
definitely, looking to do something with that.
for sure. And some of these, I mean, when we release the customizations, you'll be able to change a lot in here. But for now, what we're doing and what we're focusing on is getting all the reports out so you have everything that you want to look at. So I know some people look at the opening retracement report. Some people look at the market open volume too. That's another really interesting one. So we're going to be releasing a lot more in terms of this. Now, the other thing that we're going to be doing is building a pretty much like a what's in place screener where you can look at certain reports on multiple tickers. And that's going to be released by the end of next week, probably, where
Okay.
you'll be able to see ES, NQ, SPY, NVIDIA, Tesla, all on the same chart, all on the same page and for the same report. So that's coming next week. And I can pull that up here. Just give me 1 second. It's going to look something like this. Give me 1 sec.
Is this Figma, by the way?
Yeah.
I just started using Figma, and I just realized that's what you were using for this design.
Yeah.
So
Yeah, it's awesome. It's like the best without question.
I'm still figuring. I'm more of like I take graphics other people make in Figma, so it's but it's an incredible program. But I just put that like 2 and 2 together in my head. Sorry.
Yeah, no. I mean, it's a fantastic platform, but this is kind of what it's going to look like. So ignore the Microsoft logos, obviously, but you can see gap up, gap down, gap up, and you'll be able to see exactly what's happening right now. If certain tickers have gap up, if they have gap down, what the bias is, which one of them have filled, which one of them have not, and you can do this for any of the reports that are in the what's in place. So that would be the orb, the gap fill, the initial balance, the opening candle continuation, and you'll be able to pick what reports go into what screeners pretty much. So that's coming probably by the end of next week. So I personally think that a lot of people are going to live here in addition to the what's in play because it's like kind of like a what's in play on steroids a little bit.
Yeah, so, I can already tell you I'm going to be on the screen quite often because it's got so see, I'm looking for 5-6 pieces of data that I'm monitoring, and that's why I love what's in play so much because I'm monitoring 5 or 6 things. I'm comparing them, and I'm looking for. I mean, what are we doing here, Andre? Right? We're finding an edge. I mean, that's the whole concept of this of your entire company, I guess.
Exactly.
Finding the edge, right?
Yeah.
And I bring that up because I'm looking for an edge is where I find where multiple things line up. Yesterday, I sat around and did a whole lot of nothing because I saw this telling me one thing, this telling me a different thing, this telling me a different thing. And I just was like, okay, there's conflicting. But then if you go back to, what was it? Wednesday morning when I did this stream, I had about 3 or 4 reports that were all in the right confluence. Every single one of them was in the right direction. And even though price action looked rough, and there was people trying to get on the short side, and I understood why they were, but I also had 4 data reports telling me do not short this thing, look for the long. And so I was grabbing dips. KB that's in the chat, he was sniping the dip. He actually got the dip better than I did that day on Wednesday. So shout out to him. There was somebody else in the chat that hit it too that got long. I can't remember who it was there, but it was fun.
Yeah, it's
but that's the point, right? You know, Andre, when you see multiple, you're trying to find the edge in the market, so you're using multiple. You know, it's okay to have 1 or 2 reports that you're looking at to put with your analysis. Like that's also a very good way to approach. But like for me, when I'm trading, especially on the future side, I'm looking for 3 or 4 directional things to line up, and or like even yesterday, I think this would be an example. I think it was yesterday, but gap fill was telling me we were going down, but the opening candle, the overall structure and previous day high reports were all telling me we were going up. So we talked about this a while ago. Once that gap filled, that one was out of my way. Now, and of course, in the back half of the day yesterday, we got the dump on a little bit of a news headline, but then we had this massive recovery, and all those other data reports still held true.
Yeah. And sometimes the data is going to conflict. Like there might be a gap up that might fill, but then something else might be bullish, and the data can conflict sometimes. And there's going to be a lot of times where it does. But the way that you need to think about it is weighing out, seeing like if there is a lot of conflicting data, maybe that means you take a step back. Like exactly what we were talking about yesterday, where
say it again. Say it again. Yeah. You don't have to trade every move. Sometimes it's bad setups. Sometimes it's choppy, bad thing. It's a tug of war. You're gonna.
Yeah.
How much money did prop firms make yesterday?
Oh my God, I can't.
You know they cleaned up yesterday because so many people, and especially if they're not putting data and having the correct biases and stuff behind their trades, you're just trying to take trades and you're in a bad environment. It was super choppy. You had just terrible conditions and price action yesterday, and prop firms absolutely love that, right? Because you're blowing accounts, you're resetting, blah blah blah. So my point on that is, I went over this exact. I tweeted this out, talked about it on Spaces, and you're saying exactly. I'm glad you agree with how I'm using it.
100%.
It's hey, conflicting data, tug of war. It's not a trade.
It's no trade. Exactly.
There's no trade. No trade is a trade. Sometimes it's like being flat is a position.
Yeah, and something that a lot of people just like, what's hard for people to kind of wrap their head around is we're so, I mean, like, maybe not conditioned isn't the right word, but we're so conditioned to be like, when I show up to work, I have to do something. And in their mind, doing something is taking a trade. But typically taking a trade, like if the environment's not good or if the setup isn't there, taking a trade is actually going to be like, is not in your favor. Just because you wake up in the morning and you go to your setups and you go to your computer and the market is open, it does not mean that you actually have to take a trade, because typically if the opportunity is not there, it's only going to hurt you. And if you're, how do I say this? If you're going to be taking low probability setups, then what you're going to do is you're going to build a bad habit. You're going to revenge trade when the good setups do show. You're going to be in the wrong mental state to actually take advantage of the proper setups, to be honest.
Right.
And I'll just pull this. This is like an insane sell-off right now. But just so we can have this up too.
I have no trade. So like, if anybody's curious, just real fast, Andre, right now, I literally have no trade set up here. We just went from being above previous day high to breaking previous day low.
Yeah.
I have no trade set up right here until this calms down. You're just it's too late for me to short it at this point. But it's also I'm not trying to stick my neck out here on a long just yet. I mean, maybe if you're scalping, somebody's probably scalping it pretty well, but I'm good on that actually.
So let's actually talk about yesterday, for example. Now, let me just hide this for a second. And this is exactly like what you said, and I'll go to a 15-minute just so it can be a little bit more consolidated. So yesterday, there was no real setup, like exactly what you said. There was no real setup. There was clearly, we're sitting in a tiny range. It actually took a pretty long time for price to break out of the IB, like way later in the day, in the afternoon, which is super rare, obviously. But what happens is people aren't able to sit on their hands. And when you can't sit on your hands, you start to get smoked. Like you said, prop firms made a lot of money yesterday because of environments like this. Now, if you can identify the days where you can sit on your hands and you can say, you know what, there's no trade, maybe, and you know what's not horrible? Paper trading. If you are itching to take a trade.
It has a bad stigma, but it can be very good. I would rather, you either paper trading or I will buy. I've told you this. There's been times where like I bought I spent $100 on an eval account instead of risking, a few $100 or more on an actual trade. I said, okay, well, let me just get some screen time and trading him. I'll risk $100 on an eval account instead.
100%. And you can do that. You can just get another challenge or just paper trade. And like, I know typically people, when they paper trade, they're going to use like 10 times the size that they normally do. And like, whatever, it'll be fun. It'll be whatever, but it will also preserve your actual account and it'll preserve your mind for the next day. So like, if you blew your account yesterday, which I'm sure a lot of you watching probably took a loss yesterday, then today what happens is you come in with the idea of revenge trading. And that is where you set yourself up to lose, because you come in with the wrong attitude. You're looking for something. You have to let the trades kind of like set up. And if they don't set up, they don't set up. Like if there's a gap of greater than 1.5%, it's not a trade where I'm going to cross my fingers and hope it's going to fill. So to kind of like touch on how you said before, cash is a position, cash is a trade, cash is like meaning not taking a trade. It's a position. It's called being safe. It's called preserving your capital, preserving your account, because trading is not only about making money, but it's about keeping the money that you make. Super, super, super important that anyone could make money, but it's about keeping it over the longer period of time. And that's something that typically people struggle with, because they can't sit on their hands, or because they can't stick to the rules, or because they can't stick to the setups that they have. So for anyone who's new, for anyone who's been struggling recently, just wait for the setups to form, wait for high probability trades. And it's not like I'm telling you to just go and figure out what a high probability trade is. I'm literally giving it to you with Edgeful. Like, I'm not telling you like, go determine what an A+ setup is, and like you don't have no idea what that means. I'm literally telling you, go to Edgeful and find something that's above 75% or above 80% even, and then trade off of that. But don't trade something that's like 51% or 52%, because like you're bound to lose in that case. Like it might work, but you're bound to lose.
So like that's why like I'm looking for multiple things to line up, so I have a high probability. And I still can take a loss, right? Because I still have I'm still human. I still may have an execution error. I may take up a poor entry even if I have the right setup, and or I may oversize or not set my risk correctly, whatever it is. And sometimes trades just aren't going to work out too. Like that's all. Fine. It's all part of the game, and it is fine. We're here for the long game. We're trying to hit the base hits. So
exactly,
those are all great points.
Yeah.
All right, Andre, I want to pick your brain a little bit. Sure. So as a trader, let's look at this in a I want to go through your mindset when you're coming into the morning. Let's say it's 10 minutes till before the open, up until maybe right now, maybe the first 15 30 minutes, we get that first part of the day. Take me through what you're looking at as far as your analysis. With it can be general analysis, but obviously I'm interested in knowing how are you using Edgeful and setting up the reports, setting up your trade. Like, how 100%. Are you going through it?
So anyone who's ever heard me talk the gap fill is the first thing I'm looking at. Now,
that's why we're friends right there, by the way. We have that in common for sure.
Exactly. So what I do, number one thing is I use our TradingView indicator and I use the, where is it? Gap fill size extension. So, and now this is something that has just become a habit for me, but we actually built this into the what's in play. So I don't technically need to do this anymore. But what I like to do is, and I have this set to 0.4, and I'm going to explain why in a second. So the first thing that I like to do is see, and this is almost even embarrassing. The moment that I wake up and I first touch my phone, I open TradingView and I have this gap fill size extension loaded already. So then I'll pull up whatever ticker that I'm trading or whatever I'm looking at. So in this case, if price opens or as price is currently in the pre-market trading within this green to red area, this means that there's either going to be a gap up of 0.4% or a gap down of 0.4%. And to me, that means we're trading that day. So I'm looking for price to stay within this area, within this 0.4 to 0.4, because if you go to the gap fill by size report, and I'll go to ES quick, you can see here that if you go from 0 to 0.2 and from 0.2 to 0.4, the probabilities are very high. Now, we obviously have this in the what's in play right here. This is something that we added a couple weeks ago. So I'm still in the habit of doing it on myself, but that's number one. The number one thing that I do when I open up my computer, when I open up Edgeful, is I go and I look at the gap fill stats. I go, what weekday is it? So I go number one, always by size. Then number two, what weekday is it? And let's look here. Super, super important. Now, if you look at the gap fill stats and you look at gaps up on Fridays, they have terrible stats.
Yes.
I think this is like one of the only ones that is like flipped the stats.
So I go through like these reports all the time, and I'll just randomly come across one that is like this one. This is a perfect example. I've mentioned this because I love playing the gap fill, but I've noticed there's one little setup that I really like, and I've seen this on QQQ if you go to the same report on QQQ, for Friday gap ups.
Yeah, it's terrible. Terrible.
And I tweeted this the other day. I said gap and go. Friday is gap and go.
Yep.
And I've got the stats to show it's a strong. Anytime I see 70% plus, like to me that's a strong thing. So if I see a gap up on a Friday, even if it's a 0.4% gap or something, that size of gap, I'm like, I don't know. Like I'm not going to play that because I know Fridays and every other day is different. Every other day has more balanced stats. Sometimes some stronger than others, but so there you go. Look at that. Either
like almost every day is like super strong, except you go to Friday and it's just like gap and go. And like, when people said gap and go, I was like, where are you getting this information from? Like what stats ever say gap and go besides these monster gaps? And this is where Fridays have been doing it. So for me, I go to the gap size, number one, priority for me. And this is like my personal routine. Gap size, number one. Weekday, number two, because like obviously this is going to change as the weeks go on because there's more data. There's new data rather. And so maybe in a few months, this is going to be flipped. Maybe it's going to be 70% filled because of all the Fridays that are coming. They're going to be like the gaps up on Fridays will fill. Now, this is actually the next thing that I do here is actually something that I don't really talk about too much. And I'm going to show you what it is. Now, right here, we're looking at, I'll go to a 30-minute quick. Let's look at this week, right? So I'm looking at the New York session here, really important. Monday, Tuesday, Wednesday, Thursday, Friday. What I'm going to pull up now is the high and low by weekday report. Yeah, the moon data. A lot of people, did you see the comment? The moon data is coming soon.
Chad, so very few people here that I actually love this because I mentioned this. Did I tell you about this one time?
Yeah. It's insane.
I think I told you. I was telling you about it one time because, to me, it's absolutely it's interesting, but it is kind of crazy the little correlation there. The moon data. I love that, Chad. That's an awesome comment. I've actually looked into that on TradingView before.
Yeah, they have a really.
I'm always looking for an edge. Like that just shows you my mindset is like, where can I find any type of further confluence? If I can stack 5 things in my favor, that's what I'm going with.
Exactly. So now I'm on the high and low by weekday report. If you go to the weekly candle variant here, and you go to the green weekly candles. So what this is looking at is in the last 6 months, for every week that has been green, where is the highest point? What weekday has made the high? Over here to the right, on the green weeks, what weekday has made the low? Now let's look at this one sec. Monday has made the low 63% of the time in the last 6 months on green weekly candles. Friday has made the high of the week almost 60% of the time. So when I'm looking at my week and I'm looking, Wednesday is the current high. So let's pretend here that today is Wednesday, and Wednesday is the current high of the week. And I'm going into Thursday. It's Thursday morning. It's pre-market Thursday. 5% of the time in the last 6 months, Wednesday has remained the high of the week. So that's obviously very bad. So what I'm doing now is I'm expecting Thursday to break Wednesday's high. Because if you look at the week as a whole, Price tends to trend upwards during the week. So I'm expecting Thursday to break Wednesday's high. Now, again, today, the overwhelming majority of weekdays that make the high of the week is the Friday. In this case, again, I'm expecting price to on Friday or on today
So
to break
going into
Thursday's
the open
high.
this morning, and that happened. That already played out. We already had
Yeah,
that play out.
it did. Yeah,
That's
exactly.
beautiful.
So you can see one like it's like a staircase.
You sent off the wheels in my head right now.
This is something that I do literally every single week. Let's look at last week.
What is the red stats? Because I'm following along. That's why if you see me looking to over here a lot, it's because I'm on this other monitor. That's where I have Edgeful pulled up over right here.
Yeah,
there's my portable monitor that I'm watching Edgeful on over here beside it. No, the reason I say
I think I lost you here. I think I lost you. Yep, there. Oh, he's back. There he is.
I bumped my connection. That's what I get for playing around on stream. No, so the red weekly candle.
Yep. So now, if you
we have made the massive sell-offs have all happened at the beginning of the week.
Exactly. The high. So if you look at the red weekly candle, the highs of the week are typically, overwhelming. The highs are going to be on the Monday. So if you notice that Wednesday, like if Monday's the high and Tuesday makes a lower high, or it doesn't break the high, and then that was a continuation lower, and you think today's going to close, this week will close red, there is a very, very high chance that Monday has made the high. And then here you can see the highest probability day to make the low is the Friday. But let's go quickly to the chart of last week. Monday, Tuesday broke the high, Wednesday. Now Thursday at this point is the high of the week. Now you want to expect again on a green week that Friday breaks Thursday's high. What does it do here? Breaks Thursday's high. So in terms of framing my week, this is something I look at all the time because I want to know what is the probability that price is going to break the previous day's high. And in terms of the frame of the week, this is something I will always look at that will help me with my bias. And this is something we're also going to include in the What's in Play.
My brain's going 1,000 miles an hour pulling this in because I love this. Actually, this is something that I can add a little bit into.
Yeah,
because I looked at this report a couple times, but in a slightly different way. I guess the beauty of this, like this data, you can look at it in different ways and put it together. But I have looked at this in a different way, but now I'm seeing two ways basically that I can use this. So that's very, very. It's like the standard report on this. If you just do the standard report, it's basically. It tells me we have that curve, right? You see, it's an obvious curve from Monday to Wednesday, bottoming out, just on average, bottoming out. Usually you find some lows on Tuesday or Wednesday. And then Fridays have been strong. And I pair this with the same report we just looked at a while ago. Gap and go. So Friday, I know Friday's the strongest day. I know Friday, if it gaps up, we don't come back and fill Fridays. I feel like I just like wake up from I wake up in the morning and I'm like, okay, where's my horns at? Like we're bullish today. Like it's time to go. And I love playing the short side, but I've had to learn that. So like, as much as I love playing the short side, I've had to look at some of these reports, and honestly, that's what's helped me a ton. Is like, okay, I love playing short sides. Or we've been moving up a lot this week. I want to play the short side. But when I look at it, I'm like, Friday is just not a good day to be bearish. Like in general,
it's really not.
Sometimes it's played out, but it's like, okay, do I need to swing big on a short? Probably not. Now, now, the last couple of weeks, obviously something's happened, the last couple of weeks, but we have outside factors with that. I mean, this is kind of insane when you look at it 2 weeks in a row. And then, boy, if we make this same pattern again today, this is going to be wild. You zoom out, do you see this? Like you could just see last week and this week was exactly the same.
Exactly the same. And like, so in terms of my process, this is literally, I'm like walking you through exactly step by step, like the way that I approach and frame the weeks. Now, the next thing I do is I will go, and this is where I start to look. Okay, obviously I look at my gap size. I look at whether there's a gap up or down. And then from there, I start to say, okay, where's my previous day's high? And we do have an indicator for this. So we have the previous day's range by session. So if you're on futures, you need to look at the by session. If you're on equities, you need to look at the previous day's range previous day's range by itself. So here I'm going to previous day's range by session. And then you can obviously customize what session you want to look at. So in this case, we're looking at the New York session. You can also hide the labels here. So you can just have the prices, or you can just remove it entirely. I'll leave it right here for a second. And then this is where I look, have we broken previous day's high? Have we broken previous day's low? Typically, we're going to open between these two, not above or below. And then that's an area to me where it's like a little bit of a magnet. Either previous day's high or previous day's low is going to break. And one of the reports that we have to show this is the inside. It's a little bit confusing, but it is the inside bars report. Now, what this report does is it measures every day that opens within yesterday's range. How often is it going to stay within yesterday's range, or how often is it going to break out? 85% of the time, price is going to touch either the previous day's high or low. So you can see for every time that we open, not this day, right here, perfect. This is on Wednesday. This was the super bullish day. But you can see right here, price opened today, and I'll make this yellow or something. You can see price opened obviously within the previous day's range. Previous day's range right here. We opened right dead center of the previous day's range. Now, I want to expect price to break out to either the top side or the bottom side of previous day's range. So in this case, there was a lot of bullish factors. This is a fantastic area for me to target right here. And I'll make that.
And let me add one thing that I've been watching this exact same stuff. And one thing that I've added in is let's say that IB has not broken either side. And we know that IB breaks one side or the other pretty often. So in the morning, I'm watching that first hour. I don't know if this is an example on this exact day, but it's been something I've looked at the last. It's worked out for me the last couple of weeks. We're within. We get that. We just finished right now. We just got our first hour, so we just have our IB right now. For example, you don't have to look.
Should I go to today, or should I
just stay there? Just stay there. I'm just saying for the example. So in the morning, I see we get the IB, so we have our high and low that first hour set, and then I'm looking. Yeah, so I'm looking at the data that you have, and let's say before that you see that peaks out like a little bit later, that first peak through it.
This one?
So like right there. So like right there. So just before that, I'm looking at this and I see bullish price structure. I see an uptrend, and I see the stats that you were just showing us that is telling me like, hey, we'll probably go up. And then I'm adding this too. I'm going, okay, the IB needs to break one side or the other. That happens 80-something% of the time, and no breaks is even less. No breaks is less than 1%. There's one out of 129. Is that say
130?
Now?
Yep.
Yeah, so
129.
So it's one day has it stayed inside that IB, and we got really close yesterday. We were really close to doing that for a long time, but that's another confluence factor that I'm saying. Okay, these things are telling me this direction, and I know like just as far as taking a trade, at least getting a target. I'm like, okay, I'm looking for the IB to break, so I'm going to go if it's on NQ or ES. I'm going to go 3 points beyond that on ES, maybe 10, 15 points beyond it on NQ, and I know I've got 4 things going in my favor here. Like I feel like that's the wave coming in that I'm trying to surf, right?
Exactly.
That's the flow. I want to go with the flow.
Exactly. And so in terms of like, let's say you're a new trader, you're new to Edgeful, you don't really know what to look at. So what have we said? Let's kind of take a step back here and review what we've said. The thing that I do is I, number one, look at the gap fill. Number 2, in the morning, I'm going to say, how is my week looking? What's the structure of the week? Where's the high and where's the low of the week? Because there are certain days that I know are going to make a new high or a new high of the week. So that gives me either an overall sentiment structure of I want to have an overall bullish bias, or at least here's a high probability area, which would be the previous day's high to be taken. So in this case here, now, again, I'm marking out previous day's highs and previous day's lows. So this blue line up here is the previous day's high. And I just showed you that if we go to the inside bars report, for every time that price is opened within yesterday's range, 85% of the time, it's going to break out of one side, at least one side. Only 15% of the time is it not going to break out of the entire yesterday's range. So that means, obviously, you want to target one of the sides. So let's go back to the IB report here.
Yeah, that's what I was saying. I was like, you're going exactly where my brain went on this, too.
Exactly,
I was like, I need to target one side or the other because it's going to break. I mean, there's a very strong, I mean, only one time out of this many days it doesn't break at least one side. Like, it's going to break. So I say, okay, it's going to break one side. Which direction should I go? Is exactly how I was reading into this. I love this.
Exactly. And so the inside bars stats fall really closely in line with the IB stats. So now, even after you wait for the IB to form, if you wait that first hour, you wait for one side to break out, right over here. You wait for one side to break out. Now you have another strong bias. Now you have your strong bias now, which is bullish, because 82% of the time in the last 6 months, price only breaks out of one side. So now you want to start to look for longs here. Or this gives you a bullish bias. Let's just kind of keep it high level, not like in terms of any entries. You want to have a bullish bias now. And when you have this bullish bias, let's look at something else that is in the what's in play. And it's called the opening candle continuation. This report, what this measures is if the first hour of the market open from 9:30 to 10:30 is green, how often does the day close green? Over 83% of the time. So now you look, the opening candle here is green. So from 9:30 to 10:30 is positive. That means that there is a green opening candle. Another extremely bullish bias. So now I have my opening candle is green. I have my IB broken out to the top side, bullish. I have that there is a very high probability that we're going to touch the previous day's high or one of the sides of the previous day's range. And we have two extremely bullish reports here. My target, my bias is bullish. My target is the previous day's high right here. And then one last thing that I'll look at is the previous day's range report, which is very closely in line with.
We trade very similarly, you know?
Yeah.
We really do. I think that's, I mean, I know we chat a lot in the DMs. It's funny, like the way we approach this is very, very, very similar.
Yeah. And, I mean, which is probably why we get along so well too, in terms of talking definitely about trading.
Well, we start talking about trading and we both just like go for it. And we have like very similar ideas, but there are some like minute differences that I've picked up from you over the time. So it makes me a better trader. I love talking with other traders. So I don't ever feel like I'm talking to like some CEO of a company, right? Even though,
which I hope not. I hope that never comes across.
But I mean, that is what you are, and you're doing a great job, and it's fantastic. But when I see you, I see a trader, and I know, like, we talk together, and it's like, this is a trader. That's who I get along with. I feel like all my friends are now traders at this point, because I feel like I just can't have normal conversations anymore. Maybe I'm so deep in the game, I guess. I don't know what it is.
Yeah, it's hilarious. No, but we always have great conversations, and I just saw this comment by Gambling Bear. Please tell us mortals that it's going to be recorded. It is recorded, right?
Yes. So you can watch the spec. So on X, or so it looks like Gambling Bear. It looks like you're on X. This stays on here, so you can go back to the timeline. I retweeted it from the Wolf account as well. It's also on Edgeful's account. So either one, you can go back and watch it. And then the YouTube, it's live on YouTube. But if you go to either YouTube channel, which to be honest, I actually prefer. If I'm on X and I'm looking at live content, like it's fine while it's live. But if I'm going to go back and watch something, I'm going to do it on YouTube. And I'm probably going to throw it on my TV at night and be able to watch it big and sit there and kind of, take it in. So, check it out. Gambling Bear. You can actually go to either YouTube channel, Wolf Financial or Edgeful, and just throw it up on your TV screen or lay in a bed on your phone, whatever. It's just easier to scroll as well. Like, it's just a little bit easier to navigate. I love having the live content on both because it gives everybody that ability. So yes, definitely is recorded. And guys, if you have any questions, why we have Andre here about reports or anything, if you're not understanding something or if you want a little bit deeper explanation, hit us up in the chat right now. We still got about I think another 30, 35 minutes, at least
Yeah.
for me.
Yeah.
Andre, I'm actually good to go pretty much as long as you want to go today. So, and I know you've got other things on your docket to take care of.
I'll check my calendar in a little bit. But I mean, I think that these, not only do I enjoy obviously doing these streams like with you, whether it was even if we were streaming it or not, like just even getting on a call or like talking to you in DMs, like we pretty much talk on DMs like all day. But if we can like explain to the viewers, explain to the traders, like some of the new people, some of the people that are struggling, like what our process is or how we do this, like it's going to be super helpful. So like I'm willing to like obviously take a big chunk out of my day to do this. Like that's super important to me. And like the whole reason that we have this company is so we can like help traders. So I'm always happy to like extend the streams.
Yeah,
but I'm happy that this is recorded so everyone can go back and watch. The last thing that I'm going to add is this previous day's range. And again, now I'm looking more high level. I'm not looking at any entries. I'm not looking at any exits. I'm looking at like bias, targets, direction. Where is price going to go?
Should I be looking for longs? And where should I try to take those? So like it's kind of breaking it down step by step. So you're not looking at this going, oh, this report says I need to be long. I just long right here. Like, please don't do that, guys. Like, please don't just enter into a trade based on that. Look for a solid entry. Still use some technical analysis. To buy low, sell high. And I know it sounds as simple as it gets, and it is. Sometimes it's that simple. Sometimes it's not. But you're going from high level, just like when we're charting, right? We chart a daily chart, a 4-hour chart, and then we're coming down to a 30-minute, 5-minute, and that way you're building it from the top down, or bottom up, whichever direction you want to say, but you're getting the whole picture here. So that I think that is important to mention is just because my bias, the way I do it, just I'll explain this real fast on my side. So when I see these 3 or 4 things that you're going over that are telling me directionally I need to be long, now I'm finding, okay, what Confluence for me to get a decent entry, or I'm looking at it going, okay, this looks like price is going to reject here or may have a little pullback here. I'm looking to buy that pullback instead of playing that short. I just feel like my risk to reward on how far that short can go. It may look like a perfect short off of a certain level, but I need to know I'm probably only scalping this for 20 points and I'm getting right back out. Or I'll just wait for that 20-point pullback, and then I'm going long. So it's setting my mind up to say I'm looking to buy dips today, or I'm looking to sell pops today. That's the general thought behind all of this that Andre's going over is exactly what I do in my trading. I'm going, okay, do I want to look to buy dips or do I want to look to sell pops right now? Which data is telling me to do that? That is literally the basis, the foundation of my entire trading strategy throughout the day.
Yeah. And that's, it's really, really there. Personally for me, if you stripped away all of the data, if you stripped away all of the levels, if you stripped away all the high level analysis, I'm a very short bias trader, which I hate. I hate it. I wish I could change it. It's like psychologically, for some reason, I think it's easier for people to close a position and be scared and sell than it is for them to put money into the markets and then have exposure. Right. And I think it's so bad. It's actually one of the bigger, it's like arguably one of my biggest problems is that I'm short
the same
biased.
way.
And the data has helped me so much. Just be like, you're an idiot, because all of the data is telling me price is going up. And like on days where I tilt, I'm spamming
and only looking for shorts.
I'm like, you deserve to lose on this day because you're not listening to all of the data. All the data is telling you to be bullish, and you're spamming shorts, or you keep trying to short highs, new highs, whatever.
Well, it's like they used to. So like my grandfather used to say, "Don't look for a forest in the ocean."
Yeah, exactly.
And I know that sounds goofy, but that was literally, it was one of those just old timey sayings that he had. He would say, don't look for a forest in the ocean. And I've 100%. Been on that side, and I traded that way for a long time. I was short biased. I came in, I wanted to short it. I liked how it moved better. And there's a lot of days where it is not conducive. And I have real data now to show you that it's not conducive to try to trade shorts right now. 1 or 2 of those may work out. Great. I
Yeah.
need
Like,
7, 8 out of 10 to work out, not 2 out
yeah.
of 10 to work out.
Yeah.
Don't
And
look
like
for the forest in the ocean.
yeah. And you could make money doing this, right? You could make money capturing this rejection.
Sure.
But knowing that the IB breaks out of one side, you are 80%, 80 something percent of the time, you are playing the opposite end of the odds. You're literally playing the 15 or 18% if you do this. And like, yes, you can always scalp. Like there's always a move inside of a move, but like
exactly,
your overall bias should be bullish. And even in this case, so reviewing one more time. Previous day's high, I'm expecting either the previous day's high or previous day's low to be touched. Now, so those are my key levels for the day. One of my key levels for the day. The IB is another very key level, the high and the low of the first hour, which is right here. We have the indicator, it'll automatically do it for you. Then we're going to have to build an indicator for the opening candle continuation. So it's the color, the actual color, the open to the close of the first hour. If that's green, there is a very bullish bias for the day. So far, previous day's high and low of the IB, open and close of the opening candle, so that first hour. Now, once price breaks out, you have a bullish of the IB, you have a bullish bias. If the opening candle is green, you have a bullish bias. Now you have a bullish bias targeting now your target can be the previous day's high, but the moment that price touches the previous day's high, 71% of the time price will close green on the day. And now it's important because I know you use a different customization than I do.
right?
But so in terms of the customizations that I have here, there's two types. If you're looking at equities, typically people consider a green or red day based on whether if price is closing above or below the previous day's close. So if you look at Tesla, for example.
Did you hear that siren? Sorry if you did.
Yeah, but it was not that loud, honestly.
Oh, okay. It just feels so good outside. I have like the patio door or whatever open.
Don't worry about it.
So sorry if it's loud. Let me know so I can close it.
No, you're fine. You're fine. Okay. I just took off the. Hold on. Okay, perfect. So right here on the top of your trading view, it might be a little bit small, but it's not really a big deal. You can see this is minus 0.3% roughly. That is not from the open of the day, because if you look at the open, I'll just hide these because it's going to be clouding it. The open, if you go from the open to the current price, today's actually green because price is above the open. But you look over here and you see price is red. Why is it red? Because you go from the previous day's close to today to the current price right now, and you can see it's roughly 0.3%. So Edgeful has the ability to customize how you determine green or red. So in this case, let's say price today closes right here. It would be a green day if you look at open to close, and it would be a red day if you look from previous close to close. So really important that you know, again, I mentioned before, you should always have your customizations open. I think honestly,
I like that it's open. Yeah, I like that you have that option. I've noticed that as well, because like that way I can, okay, what data set am I actually on?
Exactly.
Yeah, I don't get confused, because the last thing you want to do is like maybe you're looking at something last night and you left it up, whatever. You're looking at a different set of data and you come back and you're reviewing it and you're taking the wrong analysis. So you definitely don't want to do that. So that's important. That's a good feature that you added.
Yeah, we might actually remove the ability to hide it just because it's obviously uglier, but it is really important. Yeah, it's super important. And then so let's just keep in mind here, 71% of the time when you look from open to the close, so the only relevant data is going to be on this day. You can look from here to here, that's the open to the close. If you look from previous close to close, and this is 71% of the time it will be green. If you look now from like the traditional equity way, you are now looking at almost 80% of the time price will close. Once price breaks the previous day's high, 80% of the time it will close above. So let me go back to NQ for a second and show you with the example that I was on before. Actually, let me turn that off. Where are we? Okay. So in this case, so we broke previous day's high, which is this blue line. Now, there is a very high probability we're going to close above this opening price of the day. And there is a very high probability that we're going to close above the previous session's close. So now you want to expect price to close above this area here. So in terms of your long bias, you will have a long, pretty much on this day, this was the most no-brainer long bias day that you could have, I've probably seen in a really long time.
Yeah.
So
what date was this again?
This was Wednesday. This was the day where you were
I was all over this. Yeah, smashing longs. So because I'm glad somebody else saw this too. I was like, am I missing something here? Everything looks like I should just be swinging for the fence long the whole day. And obviously you have to you can't get yourself in trouble. You got to pick kind of the dips you're buying. But that's why normally price goes in a certain direction to 50, 100 points.
Yeah,
I have trouble buying the next dip to keep going in a move because it's already moved a lot. I feel like I missed out. But that day I was I even bought the pullback that morning 3 times. It went without me once, and then I was I'm getting on the pullback. KB in the chat, he jumped in. He did the same thing too.
Yeah. Okay. I have to run to the bathroom for literally 1 second.
Go for it.
You have a super bladder. I don't know how you do it. I will be right back in literally 1 second.
Go for it. We can do while he's gone, I will do a little market pullback. First off, let me hit a couple of these. I see you guys in the chat over here. What a great conversation this has been this morning. Main instruments focused on, we'll ask Andre. I know Andre loves to trade futures. He does do options and stuff as well. For me, I'm mainly trading. So I'm mainly trading NQ. I will trade ES and some other things every once in a while when I see the right setup, or if NQ is just in a spot where it's just range bound or it's not acting well compared to ES or RTY or something else, I will switch up a little bit. But I mostly trade NQ, and I do most of my analysis on QQQ actually. So I watch QQQ and NQ charts. I do a lot of the data stats. If you see me post, I almost always post QQQ data stats. But SPY is just as important to me. SPY is basically the broad market. If SPY fills a gap, or SPX, either one, whichever way you like to look at it, if it fills a gap, to me, that's very important. It's very important when you have the broad market itself completing a certain move, this or that. So I watch SPY and I watch QQQ, and I mostly trade NASDAQ. Andre, I didn't know if you wanted to answer that question real fast. What are the main things you focus on instrument-wise?
So, okay, I actually have a pretty strong...
Because I know you do some options too.
Yeah. I actually started trading options in 2016. I actually only started trading futures probably last year.
There you go. Welcome to the dark side.
Yeah. I mean, actually, welcome to the light side, I guess.
Yeah. There's no going back.
Yeah. It's so I actually have a pretty strong take on this in terms of what assets do you trade. Wow, what a candle flip. Did you just see that?
President Trump.
Is he talking?
Trump is he just said he's gonna give tariffs out. Trump tariff news right now.
Okay.
Sorry.
No, I mean, this is important because you're the news guy. I'm not the news guy. You always know what's going on with the news. Wait, I think you might have just muted yourself.
I try to mute and unmute at the same time. Sorry. I have the squawker going for stuff like this. I mean,
yeah,
you're right there building into a trade or something, and then as soon as that comes out, it's well, that's it's also why you use stop orders.
Yes, super important, by the way, and even more important, personally. And I never like to say never. I never like to say you should never do this or you should always do this. But never use a stop limit order, especially on NQ. Always use a stop market order, because your stop limit order can easily get blown past, and now you're just sitting there in massive drawdown. Always use a stop market order. And for those of you who don't know what that is, pretty much if you're long here, right? Let's say you're long right here, your stop is below low of day, whatever. I'm just making this up, obviously. Now, that move, let's say your stop gets triggered right here, but it's a stop limit order and price just flushed right through. Your limit order didn't get filled. The only way that you're going to get filled is if price comes back up to touch here, so your stop limit can get filled. But if you have a stop market order, the moment that the price triggers, it will automatically sell you at whatever the price is. So the difference between a stop limit and a stop market is the stop triggers the second order. It's like kind of like the way you think about it is the stop triggers the market order to get out, or the stop triggers a limit order to get out. And your limit orders, especially on NQ, are pretty tough to get filled on. So in this case, your stop limit would have filled at the exact price that you wanted. The stop market order, you're not always going to get the fill that you want. So you might lose a little bit more money than you want, depending on what your size is, depending on how big how many contracts you're using or whatever. But one thing that I'll say about that is I personally never recommend using a stop limit order. Totally random. I don't think I've ever said that out loud to anyone, but very important in my opinion, especially when you're doing stuff like this. And same with options.
Sorry, I just scalped that long right there off the S2 pivot. What I was listening
Perfect.
to. No, you're 100% right, because I can't tell you how many times that market order, when you have a massive candle like this, it just fills you, like as it goes through, it fills you wherever price is going to. It doesn't trigger, and I've seen some bad things. Some bad things happen. Anyways, one thing. So, have you seen this new feature I just found this morning on TradingView, where you can like annotate?
What are you looking at? Do you want to
look at your? Just go to your top left above where your drawing tools are. You see where the little crosshair is?
Yep.
Click. See that new thing?
Demonstration.
Yeah. So now, like if you it's probably gonna be Command because you're on Mac.
Oh yeah, it says right here for temporary drawing.
And it goes away.
Wow.
This is a cool new feature.
That's pretty good, actually. I'm definitely going to start to use that.
And you're like, here's the price action, boom, and it disappears.
Yeah, I'm going
to be using this on the stream, like right and left now.
Oh,
I don't know if you can customize it or whatever yet, but I love it.
I just favorited it.
Yeah.
Yeah.
Look, this is what traders do. Traders share ideas, right?
Yeah, perfect. Cool. Very interesting. So we were talking about, I just went on like a little bit of a tangent talking about stop limit, stop market orders.
No, that was great info, by the way.
I'm not sure how many people do you even use stop limit orders, but if you do, just don't.
I do. I use the either like some places call it ATM strategy, or like a bracket order. I use that for every trade.
Yep.
So every trade I go into, I have a set amount of risk and I have a set take profit. I adjust those as soon as I enter. I adjust them, but it's to me, if I'm in a trade on the futures, I need somewhere that's going to get me out of the trade either direction, whether it's bad or good. I need an out somewhere. I'm not just going to let it just keep going against me or just go forever. Like I need to be out of the trade at some point.
Yeah, and what he's talking about, I'll just open up a paper trading thing right here. Look at that. Look at my old paper trading. 350 NQ contracts. Just never even closed it.
Are you still short? It's coming back. It's coming back.
Well, I was actually up a tiny bit here after that sell-off, which is hilarious. But this is exactly what I'm talking about in terms of like paper trade. If you're feeling like eager to take a trade, I'll close that quick. But also in paper trading, I was like trying to see how the trading actually works on TradingView. I did buy 70,000 BTC at 28,000, and I'm up almost $5 billion at the moment, which would be awesome if that was real.
Let's go. When are we going to Dubai? Let's go.
Yeah. But obviously that's not let's obviously ignore that for a second. But what he's talking about with the bracket orders is this take profit and this stop loss here. So if I get in right now and I buy, this is what he's talking about. So personally, I think it's super, super important that you have these like defaulted.
And you see how Andre just adjusted those as soon as he hit the trade button, and he said, "Okay, I'm risking low of day." He just drag it to where you want to. This is exactly how I execute all of my trades. I go straight in and I immediately immediately adjust to where I want my stop to be starting out, where my take profit's going to be. And then as the trade goes in my direction, as I'm trimming whatever in between, I'm adjusting that level. I'm pulling that stop up, as the trade goes in my favor.
Mm-hmm. And you can also do this on options too. I know on Thinkorswim you can do it because I use Thinkorswim. And it's called the
Webull does it too.
It's called on Thinkorswim, it's called OCO. One cancels other.
One cancels other.
And you want to be really careful, especially on futures, that you don't just place a sell order and a sell order, because if one of them gets canceled, if one of them gets filled, the other one won't cancel. So you want to make sure that when you place these orders, let's say your profit target gets hit, you're still going to have a sell order down here that later, if price comes down when you're not looking at your screens, it might get filled. So that's like an important piece that you want to just make sure that that you're like mindful about canceling all your orders if you don't have the OCO. But yeah, so I will stop this now.
Okay. There's a few things that I'd like to hit on with you, Andre. First, we've got some great questions in here. Just general trading questions that I think would be great to hit for the audience here. How can I determine when the price is overextended? It's time to wait for a pullback. I'll let you hit that one first, and then I'll give my thoughts.
Okay. There's a few ways.
So things are bullish, right? Like, let's use that example. Like, things are bullish, and you want to get long, but it's a little overextended right now. Or maybe right now you have bearish bias, bearish confirmation. You know, with your analysis. What are you looking at as far as when it's overextended in one direction or the other?
So there's a few ways. I have like a little bit, like almost like a couple answers here. One of them is a piece of intuition, which I hate to say because I'm a data guy. Obviously,
screen time.
I want to,
experience.
Screen time. That's it. That's one of the things that first comes to mind is like, if you're going to continue to short after a 260 point move in 5 minutes, in like 15 minutes, you're probably going to get stopped out. Now that's more intuition. It's whatever else. Like, there's a lot that goes into that. But in terms of like quantifiable metrics, there are some things that you can do. Now, looking at VWAP and VWAP bands is something you can do. You can look at how far away is price from certain EMAs. Now, those things personally, I don't use, but I know that a lot of people love. Like, I think that's what you do, like the VWAP bands and the EMAs and whatever else to see like what's the deviation.
I have one chart set up. One chart set up with that all the time. Whenever price moves super far from a 5-minute EMA, 9 and 21, when we get really far away from it, maybe the data's telling me like I shouldn't be trading in this direction, or I need to be trading in the same direction as this. But when we get super extended, I'm looking for a pullback to those to get my entry. I'm not trying to short the whole, even though I think it may continue. I don't want to sit and draw down for a huge amount of points just because I had a directional thing. So that's kind of the way I approach it. Plus you can just see. I think a really simple way, Andre, and I know you do this naturally as a trader. I'm sure you do. Whenever price moves a lot really fast, just in general, it moves a lot really fast. So like what just happened when you have a big candle, an outsized move, price either runs or rests. The market is running or resting, and big moves generally, depending on your time frame, right? But a big candle down then usually consolidates and then decides if it's going to continue further down. And you see those EMAs catch up. There's a few different ways to look at it, but
So again, it does fall into some subjectivity.
Sure.
In a short term move, like exactly what you were just saying, like I personally am not willing to catch a falling knife for the most part. So like, in this case,
don't tempt me with a good time. Don't tempt me with a good time.
In this case, if like, for example, for NQ, if this happens and I'm looking at a 1 minute chart, typically if I'm looking to scalp on this small of a time frame, like to catch a 10 or 20 point move, I will have to go to a 1 minute. I don't really advocate the 1 minute chart because for a lot of new traders, it can cause overthinking. Like you can get like not like overstimulated, but like overthinking. Like there's a lot of information.
Yeah.
So if you go like the difference between a 1 minute and a 5 minute is there's 1/5 the candles on a 5 minute chart than there is on a 1 minute. So if you're finding yourself that you're overthinking the 5 minute chart, there's literally 1/5 the amount of candles that there is on a 1 minute chart. So, but in this case, I would wait for this candle to at least close just so I can get like, okay, this is like somewhat of an understanding that I have. Now I can kind of understand, okay, here's the low of the candle. Maybe I'm going to get like what you just did. You longed this little bounce here. Like that's something that, okay, I'm willing to do because typically a move like this is not going to be, there's not going to be like too much continuation or like a huge continuation sell off. Now, the further out that we get from the VWAP bands, which I made pink, I mean, I don't know what colors to use here, but
Yeah.
I'll try to like make it better.
It's funny how everyone has like their like colors that they like for different things. Like I do orange VWAP and I have green on the outer bands. I do a blue 9 and a yellow 21. That's just how I've always done it. Daily EMAs I'm different. My daily 200 I use red because I just think that that's like, hey, there's your stop sign type of thing. Yeah. Green I use for the closer ones. Like I don't know. Everyone I think has a different. It's always interesting to hear like what different colors and stuff people use.
I'm just like doing it on the fly because I don't use this. I only use VWAP, which I always have blue. Like everything that I have is like white, blue, or black.
Well, there's Frank. There's one of your questions answered right there. How often do you use VWAP?
I like VWAP to understand where price. Like where's like the, I mean, it's so like corny to say, but like I'm not going to say here's the average price, but like I'm expecting VWAP to get touched at least a few times during the day. And I have no data to back that. This is more just like based on what I've seen. But in this case, the blue one is the VWAP, or sorry, this middle yellow one is the VWAP. And you can see that it did get touched once. It didn't actually retrace back to this point here. But typically on a normal day, you're going to see it get touched a few times. So I will use it in that context, but more so, I feel like I didn't really answer the question before about like, how do you know when price is overextended? Is if price is outside of the second VWAP band or the outside of the first VWAP band, or even if we put on the second VWAP band for a second, like you want to expect some sort of reversal here. If it's outside of the second VWAP band, like it was here, like you have to expect a bounce. Like to an extent,
I think about it as rubber bands. I think about it as a rubber band.
Exactly.
You stretch that rubber band that far from a normal moving average, or like VWAP is essentially a type of moving average, right?
Yeah.
But when you get too far away, that rubber band has to compress back, or like a shock. You know, if you get a shock too compressed or too too extended, it's going to come back to where it normally sits.
Yeah. I mean, look at this. Like it's been, I mean, it is crossing, but it is bouncing off of the second VWAP band. Like and obviously this is in hindsight. Yeah, and obviously this is hindsight, but in this like specific case, but the way that I look at overextension is, am I chasing this move? And if I am chasing this move and I understand that I'm chasing this move, then I have to use less size. I cannot use my full position size shorting down here or shorting down here or shorting even down here after a significant move, because like realistically you missed the move, and that's fine because tomorrow, 3 days from now, the market's not going anywhere. So like, yes,
I say that all the time.
Like the market's not going anywhere. No matter what AI does, no matter what anything, the market is not going anywhere.
No, there's going to be another opportunity, whether it's that same day, whether it's in an hour, or maybe it's in 6 hours, maybe it's the next day, maybe it's the next week. But it's okay. It's always going to be there. And knowing that and not forcing, I see this happen with a lot of traders that, still work full-time jobs and stuff. And they're like, oh, I have 2 or 3 hours here at the office during lunch or whatever it is. And they're trying so hard. I battle this when I'm on the stream, Andre, and I'm sure you've probably had that feeling too, where you are like, I have a trading window here. I need to find a trade. And sometimes there's that, like you're putting a time constraint on yourself instead of an actual setup. You're putting a time constraint to find, and you're more likely to take a lower probability trade, and you take lower probabilities, you have a lower success rate. That's just I don't think anybody can argue with with the data and science behind that.
Honestly, For people that do have screen time constraints, and I'll read that question in just a second, but just like to kind of add on what you're saying, for people that do have the screen time constraints, patience is going to be your best friend. Because, and again, I said this earlier in the stream, but for anyone who's like coming in now, we are all quote unquote conditioned to, when we show up to work, we have to do something. We have to do something. And a lot of traders, a lot of new traders specifically, will come into the markets or come into their, open up the screens, that everything's set up, and they'll say, I have to take a trade today because if not, I'm not working. Like sitting on your hands all day, you'd be like, wow, I didn't do anything today. But cash is a position.
You mentioned that a little bit earlier, and I honestly hadn't thought of a whole lot about that, but I'm actually gonna start adding that into when I talk about psychology, because that is a big piece that makes perfect sense. You are conditioned to go to the office and do something, right? Like sitting down and doing nothing is weird. It's just not a human trait that we're used to having. We're not. It's not normal. You have to fight that. I love that, Andre.
Yeah, it's something that, I mean, it just takes time to figure out, because looking at really any candle, you can say, oh, this today, and you can like think back to a day that you missed, or you can think back to like whatever. You can have this imagination that price is going to continue to run, and you can find any setup in garbage price action. You can almost universally find, hey, you can rationalize whatever it is. If I enter here, my stop is down here, I'm going to expect a new whatever, something. But if you can have real data that backs your setups, then and it makes it so much easier to actually sit on your hands, because okay, the gap, there's too large of a gap, I'm not taking this trade. Previous day's high was already taken, I missed the move. Initial, like orb already double broke. Initial balance already broke. Now, if everything already happened, then just close your computer and walk away. Close your laptop, close your monitor, close your trading screen, or switch over immediately to a paper trade or to an eval account or whatever. Because
like one thing that I preach on this is use your time wisely. You constructively to do something else. You could go back test some stuff. You could go surf some new reports. You could go maybe somebody that you follow that is, that you think has really good insights or analysis or whatever. Just go dig through some of their stuff. Go watch some YouTube videos, learn something deeper.
Yeah.
Or sometimes you just need that mental reset. And I actually like to click the X and walk away. Sometimes just go for a walk. I have this trouble where I just sit at my desk for 9-10 hours straight. I walk out to use the restroom or to grab something to drink, and I'm sitting right back down. So I feel like I'm going to miss something. So sometimes I force myself to just go take a 30-minute walk down the street and back. Just get some fresh air. Touch grass, as they say, or touch sand while I'm down here. That's what I said the other day. I said, I'm going to go touch some sand. I haven't even touched the sand yet since I've been here.
Exactly. And that's for me, because for my work, I have to have this open. Either I'm on a call, or I'm reviewing a report, or I'm coming up with an idea, or I'm doing something or whatever else. I always have this temptation to take this trade. And because I always have to have Edgeful open, I always have to have my charts open. And if I'm not disciplined with it, I can easily find myself in a bad situation. And it happened to me last week. And I was telling you about it in the end.
And it still does happen. So even the most experienced traders, the best traders, it still happens all the time. It's not a like you defeat it and you figured out how to defeat it. No, you fight the struggle every single day. It's a battle. It's a psychological battle you fight every day for as long as you're ever going to be in this game.
Yeah. And it's, clearly that sucks, but it's something that you just need it. The more times that you quote unquote win, the more times you're exercising that muscle to say, I have control over this now. So every time you have that urge to be like, you know what, I'm just going to chase it. I'm going to chase it, whatever. If it works, I hope it works. And if it works, that's awesome. But if it doesn't, you're going to be super pissed off, really upset that you broke your rules. You turned a green day into a red day because you wanted to chase some move, take some BS setup that was not even there.
I
But
just want to make 50 more bucks and pass this challenge, or I just need 50 more bucks to have this payout. And how many times that $50 extra you're trying to make turn into a blown account? Because I know
100%.
personally it's happened to me many, many times.
It's happened to literally everyone. It's happened to everyone, and it doesn't stop happening. But every time you quote unquote win that battle is another day where you exercise that muscle to say, you know what? No,
that discipline,
I'm in control. Repetition. I'm not going to blow this account, because in trading, what people get attracted to trading because you don't have a boss. You don't have customers. There's no customer support. There's no shipping. There's no logistics. There's no warehouse. There's no FedEx.
HR's not calling you.
HR's not calling you. There's no one tapping your back to say you should be doing this or that. There's no team. There's nothing. You control everything that you do, which means that you are responsible for your success and you are responsible for your failures. Nobody's going to come and help you. And if you don't have the discipline to say, I'm in control of what I'm doing, I'm going to take this seriously, because the payoff is so astronomical that you like really cannot even understand. Like, you can make your salary in one day. Like, you can make like your month's salary in one day if you just took this seriously. But a huge piece of that is the discipline. Like, if you're going to start to YOLO your account like on every trade, then you're not, I'll say it flat out, you're not going to be successful in this. And you're probably, and if you apply that logic to anything else, you're probably not going to be successful in any of the fields, whether it's business, whether it's in your job, whether it's in like learning a sport or learning an instrument or learning a language or whatever else. If you're just going to YOLO it, it's not going to work. So this is not specific to trading. This is universal. That discipline piece is super important, because the reason you're attracted to trading is the freedom and the autonomy. And that is also one of the curses of trading, because you don't have someone telling you, hey, don't do that.
Right. Yeah. You have no boss to answer to. And that's why I tell people, sometimes you need to think that way. You need to put yourself in that position. This trade that I'm taking right now. So like, let's just do this for a little quick, fun example here, a fun exercise. If I took a trade right now, I don't work for Edgeful, but I'm using Edgeful data and I'm using my own analysis. Could I enter a trade right now? And then could I go to Andre, if Andre was my boss, and say, Andre, let me explain, because Andre, you're like, well, why'd you take that trade? Well, let me explain. And if I can't defend it, then why did I take the trade to begin with? I can't defend this. I can't explain, like, well, because what am I going to tell my boss? I just thought it was going to go up. I wanted to make some extra money. Like, no, that was not a calculated decision at all. It was just you're gambling. You're gambling the company's money. So if you think about that within yourself, can you justify the trade you took and justify that probabilities and data and analytics are in your favor? Then yes, it's a good trade. Even if it doesn't work out, you can explain, well, I took it because this, and this. But if it doesn't, if you're going outside the norm, you're breaking those rules or whatever, how do you explain that? You know, you're your own boss, but how do you explain that? Like, how can you explain that to someone? You can't. I can't go to Andre and be like, well, yeah, I shorted the hole right here because, you know, I just thought it was going to keep going down. It just looked bad. Like, that's not, you're going to fire me. You're going to be like, okay, you're not trading my money anymore. Yeah, and that's the way I think about doing to myself. And I've been disgusted with myself many times where I'm like, what was I doing?
100%.
What was I doing?
So I'll actually just kind of add on that is, and I don't want to say that every single setup you take has to have a perfect plan around it and a perfect this or that. Like, there will be times, like, especially when you get more the feel for trading and you start to get like some profitability, you like maybe every other month is green and like, but your equity curve is still going up. There will be trades that you take that are green that, like, from your intuition you'll be able to justify. But in the beginning, if you're not consistent, then the only trades that you should be taking should be based on the data, should be based on the reports, should be based on a report or a strategy or a concept where, you know, I'm going to enter here. My target, there's an X% chance that it's going to reach this area, which is my target. And I'm going to tailor my risk maybe based on an R multiple or where my trade is invalid or whatever else. But justifying and being able to explain the rationale of your trade is extremely important, because if you can't explain your strategy to someone, then you don't have a strategy. If you don't have data to back your strategy, or even like something,
how do you replicate it?
Yeah,
You got lucky. You can't replicate it.
Yeah. And you said something else that I wanted to touch on. I forgot. What was the last thing you said?
About explaining it to a boss.
Right after that. Can someone tell? Can
Oh,
someone right at the end?
Well, I was saying I was being disgusted with myself because I would take a trade and I'd just take a bad trade, and I've been disgusted with myself. That was the last sentence I said, I believe.
I forgot what I was going to say based on that, but it's yeah, I can't believe
Well,
I forgot what I
the
was going
whole
to
point
say.
here though is we're trying to be where we can replicate results, right? So systematic approach and be able to replicate results. And I can tell you there was a time in my trading career where I would have like a few good days in a row, and then I would be super nervous coming into like the next day. Like let's say I had a 3 or 4 day win streak going and I was up pretty nicely, and I would go into the next day with this mindset of like I'm gonna blow it. Like I'm gonna have a red day today, and I've said that, and it's happened, and it does happen, right? You know, we have our averages and stuff, but in my mind, I was like, I'm gonna blow up an account. I'm gonna do something dumb, and I started to think that through and say, well, why do I feel this way? And the answer was actually pretty simple. The answer was because I really didn't have like a replicable strategy. I couldn't replicate what I was doing, and that's why I was nervous, because coming into the next day, I was like, I really don't know what I'm doing that's working. Like I can't look back at these winning trades and say that they weren't a little bit more luck than they were actual like strategy. You know, an actual strategy to it. So like I will throw that comment in there because as simple as that sounds, it was because I really didn't have something that I could lean on. I just like, okay, I knew some basic TA. I could pick out winners, but the problem was I couldn't avoid losers. I couldn't avoid bad trades, and I couldn't figure out a way to just consistently replicate until I started actually building a full strategy, having data in the right direction, and knowing when my strategy is not good. I think that's another big piece. There's days and even periods of time where I know that the way I trade is not conducive to the current price action. I don't need to try to even make a trade. Even if I'm trying to scalp a 20-point or 10-point trade real fast to get something on the board, that more times than not, that hasn't worked. I need to go sit out here on the balcony and walk away. I need to, go work on something else, study something else, whatever it is.
Yeah. And thank you. Now I know what I was going to say.
I knew it'd come back.
So one thing that actually to be honest, I think that this is a kind of a hot take. I think that trading in the Zone is the most garbage book that I have ever read in terms of trading psychology.
Really?
I think it is so garbage. I cannot even believe it's as popular as it is. And respect to Mark Douglas, the guy's a legend. I think that Trading in the Zone is garbage. Now, there is a book by Jared Tendler called The Mental Game of Trading.
Okay.
And in that book, he pretty much covers all of fear, greed, FOMO, anger, whatever. And he puts it all in the context of trading. And one of the things that really flipped for me was that he writes that everyone has a trigger that will eventually lead to that emotion. So if you have FOMO, for example, if there's a big move down and you didn't catch it, and you know that every time that there's a big move down, you're going to chase that move and get stopped out. Pretty much, if you can identify the triggers that eventually lead to you tilting or to your rage or to your FOMO or to your greed, that's when you say, full stop, I need to get up and reset. So for example, for me, I always tilt when price is just about to get to my entry, it doesn't get to my entry, and then goes to my target. For example, I'll just hype it. I'm obviously
it literally triggers you like emotionally.
I literally have to get up and walk away. So what I'm saying is identify your triggers, because the moment that it happens, you have to leave.
I've taken my mouse and shoved it forward across the desk and said, okay, I cannot touch anything right now because I'm feeling what you're describing.
Exactly. So let's say hypothetically, right? I had a short entry. I'm obviously just making this like a perfect example. I had a short entry at 21,810 and I wanted to be short, targeting a new low of day. I'm expecting the IB to break to the downside. And let's say this happens here, right? It comes
Oh,
right up, doesn't fill my order, and then flushes immediately to my entry. Now, my whole day is gone. Like my trading day is gone. Forget it.
yeah.
Forget it. I'm furious and like not visibly. I'm not like getting up and screaming. I'm not punching holes in my wall. I'm not breaking my
No,
desk. I'm
no,
not
no, no,
breaking my
no.
keyboard. But like
Your
in my mind,
mentality you just took a right
just
hook from Canelo. Like
yeah, exactly.
you're in a bad spot.
I'm cooked. So
Yeah,
the moment from, and this is my personal thing. Everyone will have something different. I
right.
mean, I'm assuming this is pretty universal. Like this could bother almost anyone.
No, this one gets me too.
Yeah,
It gets me bad.
yeah. But this is where I have noticed that I will chase short, like short continuate, like short, and then like now I start to get frantic. Now I'm looking to make back what I would have made and whatever else. So and this is more in terms of like the psychology piece more than anything is if you notice that certain things trigger you, like even if you take your profits too early, that's something that people get triggered by a lot. Let's say that you were short up here, right? Looking for a new high of day and you went for a new low of day, which would be right here, or sorry, near the high of day. Your stop was above the high of day. You got short right here, targeting a new low of day, and then price just flushed way further without you.
Yeah.
A lot of people get triggered by this. A lot of people like start to tilt. They're like, "Oh, I cannot believe that I left so much money on the table,"
I
and then
paper
they start
handed.
to, yeah, yeah.
I
I've
paper
done it.
handed it.
I've
I
done
do
it.
it all the time.
Yeah,
More times than not, I paper hand the move. And actually, just to bring this together real fast with one thought, Edgeful has helped me in setting price targets. And then if it does go beyond price targets, just knowing like this is outside of the norm.
yeah,
Like as long as I'm trading the normal and getting what normally happens, and that's where the probabilities come into play. So I'm just
yeah,
trying to capture as much of the piece. If one takes off without me, it takes off without me. And more times than not, it does go further than what some of my main targets are. And that's
yeah.
fine because I want to capture the bulk of the move.
Exactly. And you want to be in trading. You want to bat for singles. You want to bat for doubles. For the most part, there are
I'll,
obviously going to be days where you swing for the fences, but for the most part, you want to be going for singles and doubles. We're here for consistency. We're here for the averages, and you want to be going for easy setups. In this case, you're not going to capture the whole move. Like you're just not going to get one of these for the most part. Most of the time, you're going to get a very solid setup. Like I'm just obviously making this up here. You get short, stop at new high of day, looking for a new low of day.
Yeah.
Yeah, totally fine. Very reasonable trade setup here. Like if you see that sellers are stepping in 1, 2, 3 times, you get short here. Very reasonable. But people, when they see this, let me use my new thing here. Oh, look at that.
Let's go.
When you see this happen, most of the time, you're going to give back all the profits that you made up here, right over here.
Yeah. So I can't tell you how many times. I can't tell you how many times like I would try to like reshort that pop like right there. So it came down. I saw it pop. We finally got a couple green candles. And I like reshorted it, and I was like, okay, I'm just going to risk this high, and then I get chopped up because then it goes a little bit higher. And then you get the next kill candle, and I'm not a part of that one either. Now I'm double mentally just effed right now, like because not only did I chase a second time, and then I just got wrecked a second time. Like, that'd be probably the end of my day. I'd walk, and honestly, you dig a hole like that. Those are tough to get back out of. I do so much better when I trade and get a win first thing in the morning, like because I'm not like battling from behind the rest of the day. I don't know. That's my thing.
Almost universally, if this happened and I start messing around down here, I'm turning a green day into a red day.
Yeah.
It's like almost impossible not to.
I agree.
What I do is, and this is like kind of unique. Like I obviously don't have the time to trade all day either. But the moment that I get one decent trade in, I'm done. If I get whatever my normal win is, and I'm like, you know what? I'm happy. I'm done. I don't care.
That's why I started
I'm
using
walking
multiple
away.
accounts actually.
Yeah,
Because if I get
because you
that win
can't
in one
ruin.
account, then
Yep.
I got my win in this account. That account's done. Let me go
Yep.
to the next
100%.
one, and I'm not going to just jump in and take the next trade. I'm going to wait and see. Okay, where's a high confluence, high quality setup, and if I have to sit here and wait, if a big move happens, like I was saying earlier, more times than not, that big move happens, then there's some type of consolidation, and and that's fine. Like I would rather wait that out and let the next move set up, let sellers and buyers get more balanced out before I'm
Yep.
looking to play any type of further move. So the move
Yep.
happens, especially a big outsized move happens. I mean, we
Yep.
saw
Like
this, I
this.
think, on Tuesday or no, it was Wednesday. It was that Wednesday move.
This one.
So when that move happened, look at the entire rest of that afternoon was terrible.
Oh, how many accounts do you think we're blowing right here?
A ton. Because people
Shorting
kept
over and over and over again.
Yeah, short, stop, short and stop, short and stop.
Oh.
Or if they tried to, even if they tried to long and buy the dip and risk the low, and it made 3 more impulse lows, and it never really went anywhere. But we ran up 200 plus 250 points or something crazy.
Yeah, 240 points
240.
Where is that? 240 points from 10-10. I mean, literally in less than 2 hours.
Yeah. So now the market has to consolidate. Water has to find its level. If you slosh water around in a bucket, it goes back and forth, and then you have to let that water settle back down. That's kind of the mental picture I use to understand price action.
Yeah, 100%. And when you see a move like this, here's another one. Here's another trigger that people have. If you missed this and now you're going to FOMO over here, like we just spoke about, you are going to have a rough day. So again, the triggers, how do you identify your triggers? What bothers you? Where do you see yourself starting to make mistakes after X criteria happens?
Yeah.
Where do you now start to notice that, okay, I have a pattern of when I miss a big move, I start to chase and this starts to happen. And that's where you say, close the screen, walk away, or at least like go get some water, take a breath, go outside for like 5 minutes, and then you can come back a little bit more reset. But if you're like fidgeting at the screen, at the keyboard to like enter your trade, you're like, this is it. This is the perfect setup.
I'm sitting here holding my mouse like, that's why I let go.
Yep.
I catch myself like sitting there like hovering over the buy or sell button, and I'm like, why am I hovering?
Oh, yeah.
I'm just. But one other
I've
thing,
done that so many times too.
One other thing on this is just the other side. So let's say you caught the move. You did catch that whole move right there, and you're like, hey, I've got profit now. I can risk some profit to try to make some more. How many times has that ended up well for you? I looked at my stats and I wanted to throw my laptop out the window. Like I was like, what am I doing? And I looked back and I said, okay, when I have a good trade, a really, especially a big trade go in my favor, I would say at least 7 or 8 out of 10 times that I like 70-80% of the time that I take another trade risking some profits only. I hate when I hear people say that, by the way. You hear it all the time on spaces. You see, all right, hey, we just had a winner on this. I'm just risking profits only during power hour or whatever.
I think it's nonsense.
I looked at my stats, and more times than not, I end up lower than where I was. And I've sent you the screenshot, the P&L screenshots, that where it tracks
and you
where
see
you're
like
at during the day, and I'll see like this, and then I'll see like just a trail back because like I took 2 more small shots at it. I didn't use regular risk reward because I was like, well, I'm just going to risk, maybe I'm up $500. I'm just going to risk $100 here and see if I can make another 200. Like it's still good 2 to 1, but more times than not, because I just hit a big win, I just had a nice baseball. The baseball example you were talking about, just batting for singles. That's all I'm looking. Don't try to extend and get that double and get thrown out by the center fielder, or don't swing at every pitch. Yeah, I love that example too. We're batting for singles, but we're not swinging at every pitch. You're throwing a curveball in the dirt. I'm not going to try to swing and put it in play.
Exactly.
Sorry, I mean that's just how it works.
And typically, what'll happen is after you do, let's say you are up 500. And you risk 100. Now you lost.
Now you
let's
want to
say
make
you lost
that. Now you want to make that 100 back.
Yeah, now you're like, okay,
You
if I
lose
just get
another
back to
100.
500, if I just get back to 500, yeah.
And then now you're at 400, and then you're out, and then now you're like, okay, well now you lost another 100. Now you're at 300. Well, now I'm trying to double up the size so I can get back to 500 where I was.
Yep.
And now I'm doubling down risk, and now I'm right on the day.
Exactly. And just so everyone watching, like that, you only just get better at dealing with it. Like it doesn't go away. Like we're all humans, obviously. And like the more robotic you can be, obviously the better. But you just get better at dealing with that. And you just have to exercise the muscle. You just have to tell yourself, I have to like win this battle. Every time that feeling comes up, you have to win that battle. You're not going to win it every time, but when you lose, you have to make sure that it doesn't blow your account. There will be days where you lose that battle, but you have to set some sort of like personal risk or like something that's going to tell you, hey, I need to cut this at like whatever. I'm not going to let this day go red, or I'm not going to let this day go more than like 1 times like what my green day was, or whatever it is, because like I'm not expecting you guys to like automatically listen to your, like just be like some robot where you're like completely disconnected, because it's like never going to happen. But just have some sort of like safeguard, some parameter that's going to help you like avoid blowing your account or like losing a month's worth of profits. Because if you look, like for example, options traders, for people that like to sell options specifically, credit spreads, which is something that I personally love. When I first started trading credit spreads, the risk to reward is like very skewed. So your wins are always very small. Your losers are very big, but you win 90% of the time.
Your win rate's 90%. Yeah.
Yeah. So, but because your win rate's 90%, it doesn't mean that much, because your wins are literally like 1/10 your losses for the most part.
Yeah. What's the context with this?
Exactly. So the important piece, especially if you're an options seller or if you're a trader in general, is that you don't let 1 losing day or 2 losing days wipe out 1 month's worth of winners. Because honestly, it does like take a toll on you when that happens. You're like, I cannot believe I just did, like, especially when you like finally walk away, you're like, I cannot believe I just did that. I worked so hard to take all these great setups, and then 1 bad day and I like ruined 2 weeks worth of profits, or I ruined 3 weeks worth of profits.
Yeah.
And I mean, unfortunately, I don't have this like magic potion or some magic recipe to tell you exactly when this is going to happen or whatever else. But like, this is more just like psychology talk that we've throughout the 2 hours or however long we've been talking, we've given you the perfect setups to take, exactly how to find what your setups are, where your key levels are, what reports to look at. And now we're touching on the psychology piece, and like we have done all the work in terms of the analysis. Now the psychology piece is like, now we're like, I mean, not with any like intention, like we've just kind of like naturally the conversation has flowed towards like psychology. And this is super important for you guys to know, because you have everything. I mean, for the most part, like realistically, like you have everything you need in terms of Edgeful to get like find the profitable setups, find what an A+ setup looks like. But in terms of like the execution, like we're never going to tell you buy here, stop loss here. Like we're never going to give you a signal. It's never going to happen. We're going to give you all of the probabilities, everything that you need in terms of the context to take high probability trades. But like the psychology piece, in my opinion, obviously coming from an owner of a data analysis software company, your psychology needs to be built upon a foundation of an actual edge and of actual high probability. Because when you have the confidence in your setups, all of the things that we're talking about become a lot easier. Because if you know that the IB double break stats are 80% in one direction, there is no reason why you should be going for longs after a certain point, after price breaks out. Or if you are short bias and you're a little bit hesitant based because the candles aren't forming the way you normally like them to, you still have the data to give you the confidence to say, I'm in this trade because I'm expecting price to only break one side. And that gives you the confidence to sit in a trade that might be in drawdown, but because you know that the stats are so heavily favored in a certain direction or in your favor, then you can kind of sit back. And that's where you kind of are allowed to detach a little bit psychologically from the trades, because you know the probabilities are in your favor, especially when they're really high, like north of 80%.
Right. Yeah. First off, anybody, if you're just out there, if you're learning and you're trying to follow somebody's signals, you're doing it completely wrong. You're asking to get blown up. Please do not ever just follow. If you're watching me on this stream, don't take a trade just because I'm taking a trade.
Yeah.
Learn the process and the thought process and the analysis behind it, and then find out how you can replicate that in your own type of strategy, your own type of way. The way I trade may not be the same as the way Andre trades or the way that 4 other people trade. I trade with a lot of people every day on Spaces, right? Also in Discord. We all trade very, very differently. Like in my Discord, or it's not mine, the Discord I'm a part of. There's one guy that's auction market theory, only goes long. He only trades on the long side, Andre.
Yeah, I could never do that.
Are you lagging for me?
Are you lagging a little bit? I think you're lagging a little bit. Is he lagging? Am I lagging? I think you're lagging, to be honest, but anyone who's watching, can you let us know who's lagging? Is it me? Is it Amp?
It's definitely me.
Yeah, you're back. I think you're back.
Okay. All right. Sorry about that. Yeah, it was. I just saw my whole system just start whoa.
You're good
now, though.
Yep, you're good. You're good.
Okay, so what I was saying is one of the guys in the Discord that I trade with every day, he only longs. He's only on the long side, auction market theory. That's all he does is he just longs off of his spike bases and his analysis. We spent this much time at B period, and his that's just his analysis, right? He only and then on the other side, the girl that's in there, she only hyper scalps to the short side. Wow. So like I have somebody that's only going long with big size normally and looking for big moves. And then I have somebody that is looking for like VWAP broke and it popped up just enough to back test it like within like a 1 minute candle. And she's throwing on size and trying to get an 8-10 point move to the downside rapidly, just on reactions only. So she's trading reactions and he's trading. And then here I am in the middle of like my own style that's completely like in the middle of both of them. They're both successful in what they do. I cannot trade like they do, like either one of them. I can find my Confluence if they have a certain level, if they have a certain analysis that matches up with mine. That's where I find Confluence from other traders. And the whole point of all this is you should not try to trade like anyone else does. You can learn their strategy and see if it works and fits you, but hyper scalping doesn't fit me. It just doesn't fit. Same. It doesn't fit me. But also only trading on the long side and playing that game, that doesn't fit me either. And like longing and just holding, I'm a little bit more accustomed to that. But like I know a lot of people that they take a trade and it starts going in their direction, they're getting out and they're already looking to go on the short side. If I'm still in the trade and I'm down to runners, I'm just going to let it fully play out. I'm not trying to just flip back and forth and start. I get myself in trouble if I do that because I start just like, oh, I can see a short and a long from both of these two levels right here. I just need to hold back.
No, I definitely agree. And you know, I think you say this too, is you need a handful of reports that fit your trading style and your personality. And once you find those reports that click with you, that make sense, like if you're trying to force some concept that like you don't really like for example, I can't do the fair value gap. Like I don't look at them. I don't trade off of them. And that's just,
you're not a turtle soup guy.
I'm not a turtle soup guy, whatever. I don't know what, like manipulation, accumulation. I don't know what. It's just not my style. I'm not saying it doesn't work. It can very much work. I don't know. I'm not into that. I don't research it. But that's something that people find success with. I have not looked at that. If someone were to tell me, hey, I'm going to try to like force you to trade in this way, it would be harder for me to have the confidence in the setups. It would be harder for me to take the setups because it doesn't click with me. I don't really like the overall concept of it. So for me, I like key levels, high time frame key levels, which are previous day's high and low, previous day's close, initial balance, like opening range breakout, stuff like that, where these are levels that they form all the time. They're very key. The data is very strong behind them, and that's something that I can go based off of. But exactly like you said, there is certain things that fit your personality, and obviously we never recommend. There's no better feeling than hearing M take a position. Awesome.
But that's
What did you take?
49. That's the way to go. And so like I know 49's in a bunch of these streams. He listens to a lot of spaces and stuff. That's the way. So before I did all this stuff, I was a listener of spaces. I was learning from other traders, and I was following them. And one thing I learned the hard way, as a young trader, was trying to follow other people's trades, especially people that trade way different than I do, especially in options. It's even worse because people have way different strategies in options, even because there's so many complexities. But this right here that 49 is saying is the exact way to approach it. If you see something, so here's how I'll use this example. If I'm getting in a trade, I see a trade, I'm going to get in a trade. Either I'm deciding if I'm going to take it or I'm already in it. Let's say I'm already in it. And I hear Andre say, okay, well, I'm going long from this level right here because of this, and this.
Yeah.
Now I'm going to look at my trade and be like, how far is my trade played out? Okay, maybe I didn't consider that. And I know, like, okay, maybe that's Confluence to like go ahead and take some profit, get out of my trade, or move up a stop, maybe take some trims, make some type of small adjustment. It doesn't change what I'm doing. Yeah. I'm not going to just get out and take the same trade as you. But I can use that as Confluence. Or the same way, if I'm looking at taking a trade and I'm like, okay, I think I want to get long here. And it's either way. Either I hear Andre go, yeah, hey, I just took a long at this level. And I'm like, okay, I'm looking at the same thing. And there's some further Confluence and some further confirmation that, that somebody else is seeing what I'm seeing. Or even if we trade differently, maybe you're looking at a couple reports on Edgeful that I don't even normally pay attention to. But maybe I'm looking at the max consecutive bars or something. You're looking at some kind of reversal or whatever. I'm looking at this. I'm going, okay, we've had 7 red candles in a row. We need to, we should get a green one. Yeah, just some example like that. But the Confluence is the thing, and this is actually sometimes it can be bad. So Sharky, that I trade with all the time, me and him go against each other all the time. Yeah, we go against each other all the time, but we're usually against each other from about 30 points apart. So we can both win in these scenarios and both be successful in these scenarios, but we read and we do things a little bit differently. A lot of our levels match up, but we just trade a little bit differently. Yeah. It's fun. It's sometimes it'll mess with you because sometimes you'll have you'll feel good about a trade and then you'll hear 2 other people. Wednesday, I'm on spaces. I have 3-4 people going short all morning in my ear and I'm trying to take the long because everything I'm seeing is screaming bullish to me. And so I'm like, okay, well, I'm going long because of this, and this. And I hear, well, I'm short on this. I'm short on this EMA and this. And I'm like, okay, I take it into account, but sometimes you just have to block it out too. Sometimes it's just noise.
Super important too. In terms of especially when someone you see is against the trade that you've taken, now you're like on the back foot. Especially if it's someone that you like or someone that you respect or someone that you're like, oh, I like the way that they trade or like whatever else. Now you're like, wait a minute, am I wrong? That's it's usually never, they're wrong. It's always, am I the one
that's wrong? Yeah, the doubt creeps in your mind.
Exactly. But
that's why it's so important to have a system that you can replicate and that you can stand on and you can defend. That's why. So it's just like a debate, right? If you're having a debate with someone, if you have a strong thesis or strong hypothesis, you should be able to stand on it. And if somebody challenges that and you immediately back down, you didn't have that strong of a trade thesis or a trade hypothesis, right?
100%.
If you immediately question yourself that much, it's like, well, how strong was your analysis? Did you have 4 reports that were in your direction, or were you just looking at one and maybe not considering 3 or 4 other things that are going on?
Yeah. Again, that confidence that you're going to get and the confidence in your system is so, so crucial because the markets change, which is good and bad. But for example, for me in December, when I was going for these gap fills and they were not filling, I was like, what is going on? Like this was something, it was like bothering me. I was like, what's happening? But then you look at the data and you're like, well, right now the gaps aren't filling in the last X amount of times. okay, so this allows me to take a step back, but now the gaps are filling, they're starting to fill again. And this is where I can say with confidence, something I can replicate, a setup that I can replicate is the confidence in the setup. The gap fill is something that I know works. It's something that I can replicate. It's something that I can explain. It's something that I can show anyone, which I do obviously a million times.
And that helps
that,
because you're able to show it.
yeah. And I can explain. I've literally explained the gap. I mean, I'm sure that anyone who watches the stuff that we post, like, they're probably so tired of me saying the word gap fill. They're like, okay, enough. Like, pick something else. But this is the thing:
as much money as it makes me, I will never get tired of it. I will say it 1,000 times. I'll listen to you say it 1,000 times because it's such a strong report that it's
so strong.
I never get tired. And I hope people don't get tired of that, because if you realize something is super strong, breaking a previous day's high or low and closing green.
Yeah.
You break the previous day's high and you close green. That's such a strong report.
Yeah.
I will say that, and I'll repost it. And if you get tired of seeing me post it, sorry, I'm making money doing it. Sorry, I'm gonna keep posting it. And I would rather post the same things over and over that are working than just posting random stuff that, you could look at it this way.
Yeah,
great. I'm gonna stick to the what's solid here, what's working. Stay with it.
And you're gonna. What's crazy actually is that once you find something that works, it actually becomes like a little bit boring, because you're always looking at the same setup. You're always taking the same setup. And like, I mean, luckily you make money from it. So like, you don't really care how boring it is. But like, if you're always I mean, like for me, I'm just thinking about like my routine. I wake up, I open up my phone, I look at the, I open up Edgeful, I open up TradingView, and I'm like, okay, is there a gap up? Is there a gap down? What's the size? No matter what, it's like it's like an instinct now.
First thing I go to.
And I look. How big is the gap today? The number one thing, I don't care what's going on. I don't look at the economic calendar. I don't look at whatever else. That comes later. The economic calendar comes later. I say, is there a gap up or down? I want to target previous sessions closing price. That's it. And it's super boring. But once you start to make money from it, you're like happily bored waiting for this thing to set up, happily bored waiting for the markets to open, because you know that like this setup is something you can repeat. It's something that you like, something that like you have actual data behind too, which is super nice, that you're not guessing on whether this thing is working. You're not using your emotions to trade. You're literally trading based off of legit data, which, I mean, I don't personally see how people trade off of, like, they don't use any data. It doesn't, I cannot wrap my head around how people trade off their emotions or trade off of like intuition entirely, especially as the markets change. Like the markets, without question, universally, anyone that like actually trades every day or like is up on the screens every day will tell you that from November 4th or November 1st or whatever the election day was, up until now, the market is completely different from the July behavior to November. 100% it's different.
Because I spend we just made a new low a little bit here, low of day.
Yeah.
I can tell you just the behavior. Like some days you can just tell when dips are getting bought with size and some days they're not. And you can see some days when there's just no participants, just because I watch all the candles form, I watch volume, I watch big orders, time and sells, and I do it every day. But I can tell you things do change. And actually within Edgeful, there's a couple ways that I actually look at it and see the difference. Like if I look and I see, okay, over the last year to date, not right now, but like 1 year, the last 1 year, don't want to do year to date right now.
Yeah,
the last 1 year or the last 6 months, this has been happening. But if I've noticed it's been acting differently, I could go and look at the data from December, after we got the first election pop. I could go let's go look at December and January up through now. So basically just over 2 months.
Yeah.
We'll go look at 2 months of data. And I bet the numbers, and I've noticed this on a couple of reports, the numbers are much different than they were.
Oh yeah.
Compared to the 6 month average or the 1 year average, because the market is acting different. There is a way you can go in and check those things out. The ranges have been wildly different.
Yeah, and I'll actually just move this over.
I got you.
Oh, okay, perfect. You're good. All right. So yeah, all you have to do here is open up this date. So when you're on any report, what you want to do is click on this date range, and then you can pick any date range. We have these defaults that will automatically snap to any date. But in this case, like you can pick any dates you want, and you can see how the markets change.
What's your favorite date range? While we're on the subject,
so
because I know that the site defaults to 6 months. That's where I kind of live on a lot of things.
Yep, same.
Just depends on the report, I guess. But what's your favorite?
It's kind of weird because usually it's a little bit harder to identify the, like, quote unquote, like the day that the markets change, or like the week that the markets change. Like, it's usually really hard to determine.
Yeah, unless there's some big event,
like the election,
or like the Fed back on December 18th when we had a big maybe event. That's why I was kind of asking you. I was wondering if you used any reference points that way, or if you prefer to use just a certain amount of months or time frame. There's no right or wrong answer, of course.
Yeah. I personally, I have been going based off of November 1st for some of these things. Like, if I am going to go to a shorter time frame than 6 months, I'm just going to November 1. And the reason for that is that, at least to me, and what I have noticed, I've said this like a bunch of times, but like, the market has definitely changed as of November 1st up until today versus like Q3 or even Q2 of 2024. Like, it's not even close to the same. Like, from what I've seen and like the way that the markets have moved, it's not even close to the same. And the data obviously shows that, but that's what I like. I've actually never thought about going based off of like December 18th or anything else, like any maybe like significant earnings or whatever.
Right.
But yeah, I mean, I've been going based off of November, but before that, I would never go based off of a specific date. I would go based off of a specific time frame, like a 6 months or 3 months or whatever else. Typically, I won't go 1 month, to be honest. There's not really that much information. There's only 5 potential trading days, 4 weeks. So there's only really 20 days in 1 month, but typically 3 months is like really the lowest I'll go. I will check the 1 month sometimes just to see, like, is there something like finicky going on? But 3 months, 6 months, and 1 year, I will never go more than 1 year personally. Never. But
yeah. The only time I've gone further than that is like if I'm looking at seasonality. So like there's certain like swing trading reports that I use them for some of my long-term stuff, like not day trading stuff, but I'll look at some of the seasonality stuff, or earnings performance. I think was an interesting one that I went back and looked at a few things. Like once NVIDIA started going on this crazy run, I went back like 3 years or so. Somebody else like Netflix, I went back like I think 2 years and was looking at the average performance there. The seasonality stuff. I love to go to the seasonality and go to like. So like now I guess you could probably I'm not doing the 5 years. I never really go to the full 5 years because the 5 years still grabs COVID. Yeah, the market is so different since COVID. So I will look at what's been happening maybe 2 to 3 years back, and that's where I personally find stuff. And I do love going down to the weekly on that just to get the like, and obviously it changes because every year like earnings reports are on different weeks and stuff, but just to get this general breakdown picture, I look at the monthly and then I go down to the weekly and I'm like, okay, we're about in this cycle area. Yeah. I like this too, because so like there was one thing, if you look at like Tesla, for example, this is a perfect example. Tesla had a major shift essentially over the last probably 3 quarters that they've reported in the narrative of Tesla. They were in a bad downtrend for a long time, right? But autonomous driving is a major change in the Tesla story. The full self-driving coming out in more places, the robo-taxi and the Optimus, the robotics, like all the AI side of things, and what the future of Tesla is so different now than it was. Like if I go back 2 years, it was a completely different storyline. Yeah. Completely different storyline.
And you can see each of the days down here. One thing that I will say is, unfortunately, I do have a call in 1 minute.
Okay. Hey, that's fine. I just realized we've been going for almost 2 hours and 40 minutes here. So
yeah, which is nuts.
This is crazy. And the thing is, if you didn't have that call, I wouldn't have even noticed. We would probably gone for another hour and a half at least.
The only reason I noticed is because I got a reminder.
Yeah. There you go. All right,
That's it.
Andre. Well, you know what? I think this is a good spot to end it. I think this was a fantastic,
Yeah,
fantastic convo here this morning. I appreciate
man.
you, my man. We'll see you. We'll do this again soon. Of course,
Yeah.
I am doing the live trading every Friday morning for sure, and then either Monday or Wednesday. I always keep everyone posted. Andre, always welcome to stop by, do some live trading with us.
Thanks,
so
man.
appreciate you joining this morning. Appreciate you walking through us on Edgeful. And Andre, I will see you next. I'm going to go ahead and end this stream right here, guys. Check out edgeful.com. Check out the new site. Walk through it. If you have any questions, that's your guy right there. That guy.
What's up? Yep.
Fist pound. Boom.
Right there.
There it is.
Right there.
Awesome.
I love that.
All right, Andre. Take care, everyone. Y'all have a great rest of your day. Happy Friday. We'll see you next week.